Okay, good morning everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagodia. Now, before I start the discussion, if there is no issue with the sound, please do let me know. Either say yes or type yes, only alphabet yes, or give me a thumbs up. Anything is okay. Done. Thanks a lot. Okay, so yesterday what we have done? Yesterday, what we have done? We started with a discussion on international trade. Correct? We started the chapter on international trade. And in international trade, yesterday we have discussed concepts related to exchange rate. Exchange rate. What is an exchange rate? It is basically how many units of domestic currency we need to pay in order to get 1 unit of foreign currency. Or else we can also simply say, if you have 1 unit of a foreign currency, let's say you have $1, if you sell the dollar in the market, how many rupees will you get in return? That is also basically exchange rate. Now, what are the methods? How do we determine exchange rates? There are two methods, but again, I said there are different varieties also. Right? For example, in case of India, we follow a concept called as a managed floating. Fixed exchange rate and floating exchange rate. Fixed exchange rate, the government will determine what is the exchange rate. That is for every dollar, how many rupees you are supposed to get. Right? Assuming it is in terms of currencies, then that determination will be done by the government. Floating exchange rate, government will not determine, government will not fix the exchange rate. Rather, the market forces, that is supply and demand forces. Supply and demand forces for the currencies will determine what is the exchange rate. Then we understood what is the meaning of the term devaluation, depreciation, revaluation, and appreciation. Okay, so devaluation, depreciation, revaluation, and appreciation. The basic idea is whenever it is done by the government, we simply say either it is a revaluation or a devaluation. Whenever it is done because of the market forces, whenever it happens because of the market forces, it is appreciation or depreciation. Then what is the role of Reserve Bank of India? We had a discussion if there's a continuous appreciation or continuous depreciation, right? It is not good for India. It is not good for India because it will have an impact on many of these transactions. Then what is the role of government? I'm sorry, what is the role of a Reserve Bank of India? I told you Reserve Bank of India, whenever there is a huge fluctuation, a lot of volatility is there, Reserve Bank of India will intervene in the market, try to stabilize the exchange rate. RBI does not have any fixed target in the mind. RBI simply tries to stabilize the exchange rate. How so? If you remember the example of onion, I hope you remember that. Right? It's very easy. Whenever the onion prices will increase, the government will increase the supply of onion so as to stabilize exchange rate. So stabilize the market prices. Apply the same logic. If rupee value continuously increases, appreciates, RBI will sell rupee. RBI will increase the supply of rupee. And if a dollar value continuously appreciates, right, that is dollar is appreciating, then RBI will sell dollars, increase the supply of dollars. That's a basic idea. And in the context of RBI, we also discussed the idea of a sterilization. Sterilization. What is the meaning of sterilization? Whenever there is a lot of fluctuation in the exchange rate, RBI will intervene and try to stabilize, but that might in fact lead to inflationary trend. And in order to address the issue of inflation that can happen because of RBI's intervention, RBI can simply supply bonds or suck out the liquidity from the market. That is called as sterilization. Then we have discussed a concept of nominal exchange rate, real exchange rate. Nominal exchange rate, comparing one currency with another currency. Very simple, comparing one currency with another currency. Real exchange rate, comparing competitiveness, trade competitiveness. How can you exchange Indian goods with USA goods? Indian goods with UK goods. That is basically the real exchange rate. And I told you whenever the real exchange rate is equal to 1, whenever real exchange rate is equal to 1, I said, we generally say the currencies are at parity. The currencies are having the same purchasing parity. That is whether you have $1, assuming nominal exchange rate is equal to, that is $1 is equal to 50. Assuming that if the currencies are at parity, it simply means whether you have $1 or 50 rupees does not matter. You'll be able to purchase the same set of goods and services both in India as well as USA. That is in the context of real exchange rate. Then we discuss the idea of nominal effective exchange rate, real effective exchange rate. Right? So basically both are indices. Both are indices. Please remember, nominal effective exchange rate and real effective exchange rate are published by Reserve Bank of India. Whenever near index increases, it simply means rupee is gaining value and the basket of currencies are losing value. And whenever REER increases, whenever real effective exchange rate increases, it simply means India's trade competitiveness is going down. Indian products are becoming costlier comparatively in the international market. Then we discuss the concept of balance of payment. We started with the concept of balance of payment, correct? This is where we started. We understood what is balance of payment. I said balance of payment is simply a record of transactions. I repeat, it's a record of transactions. Transactions of what? Any import transaction that will lead to basically inflow of dollars, and any export transaction that will lead to outflow of currencies from India. All of these are recorded. All of these are recorded in a table or maintained a record of it, that is called as a balance of payment. Who will maintain balance of payments in India? Reserve Bank of India. RBI will publish the balance of payments records. Now, in case of India, generally we look at only two accounts. Even if you have read NCIT book, right? If you have read NCIT book, they have mentioned only two accounts. But at the bottom, they have told IMF in fact says there must not be two accounts, there should be three accounts. One is a current account, second one is a capital account, and the third one is the financial account. But in India, historically, we have been publishing only two accounts. One is a current, second one is capital and financial account. What is the basic idea? Current account transactions will consist of all the transactions which will have an impact on income of a country. Capital account transactions are those transactions which are associated with assets or liabilities of a country. So these are certain transactions under current as well as capital. Now let's start. Let's start for today. Okay, let's start for today. Now, whenever you're reading newspapers, again associated with balance of payment only, you'll come across certain very important terminologies. One is called as trade deficit or trade surplus. One is a trade deficit or trade surplus. Now, please look at the first component in the balance of payment. Please look at the first component in the balance of payment. It is import and export. Now, whenever you talk about import and export, generally the imports or exports are divided into two parts. One is goods or merchandise. Second one is services. One is goods or merchandise. Second one is services. Now, when you say trade surplus, a trade deficit, or a trade balance, what does it mean? Whenever your value of imports, just give me a second. It is written here. Whenever your value of imports is equal to value of exports, we'll call this as a balanced trade. All of you okay? Whenever the value, not volume, value of imports is equal to value of exports, it is called as a balanced trade, which means you are exporting, you are receiving $100. You are importing, you are paying $100. So there is a net zero inflow of dollars into India whenever there is a balanced trade. On the other side, when you say trade deficit, it simply means value of imports is greater than value of exports. In simple terms, imagine you will import $100 worth of goods or services in India, and you will export $80 worth of goods or services from India. Can I simply say a net outflow? There is a net outflow of $20 because of this trade. Let me know if anybody has a difficulty right now. Right, so if you import and pay $100 and you export and you receive $80, so can I simply say there is a net outflow of $20 to rest of the world. That is called as a trade deficit. Trade surplus, exactly opposite. You will import $80 worth of goods and services. You will export, let's say, $150 worth of goods and services. You will pay $80. You will receive $150. So can I simply say India, because we're talking about India now. India overall is receiving $70 in these two transactions. Right? So that is nothing but trade surplus. Now, what is the context in India? Right? What does India have? Does it have a trade surplus? Does it have a trade deficit? Very simple. Please have a look at the points now. Please have a look at the points. Whenever you talk about goods, whenever you talk about merchandise, merchandise is nothing but goods. Whenever you talk about goods, India has a trade deficit. India has a trade deficit whenever you're talking about goods. All of you are able to see the numbers. Do not by heart anything in the table. Many of you will start asking me, should we remember the table? Absolutely no. But please have a look at the table and let me know. Can I say in case of merchandise, India has a trade deficit. Whereas in case of services, India has a trade surplus. But overall, what is the situation? Overall trade, India generally experiences a deficit. Overall, India generally experiences a deficit. So there is a trade surplus in case of services. There is a deficit in case of merchandise, but overall, India experiences a deficit. Now, when you take member countries or trading partners, when you look at the trading partners, India has a trade surplus with some of the countries, and India has a trade deficit many other countries. For example, if you take the top 10 trading partners, if you take the top 10 trading partners for India, out of top 10 with 9 countries, India has a trade deficit. Is it okay? Is the point okay with all of you? If you take the top 10 trading partners, out of top 10 with 9 countries, India has a trade deficit. Only with one country we have a trade surplus. And which is this country with whom we have a trade surplus? USA. With USA, United States of America, USA, we have a trade surplus. And with most of these other countries, or let's say 9 of the top 10 countries, trading partners, we have a trade deficit. Example, the country with which we have the highest trade deficit is China. We have a very high trade deficit with China. Now, please do let me know, all of you able to connect the dots when India is trying to reach out to USA and have a trade agreement with USA? Why is India doing this? Are you able to understand? And why we do not want to enter into trade agreement where China is present? Please do let me know. Are you able to connect the dots? Why India wants to enter into trade agreement with USA? Of course, we want to trade or let's say have an agreement with many other countries also. But why specifically India says, I do not want to enter into a trade agreement wherever China is there? Because our argument is already we have a huge trade deficit with China. And if I enter into an agreement and then I'm allowed to import without any restrictions, then imports into India from China will suddenly balloon. It will suddenly increase. So I do not want to enter into such agreements. So this is basically the concept of trade deficit, trade surplus, and balanced trade. Now have a look at the next point also. Have a look at the next point. India has a trade deficit. Agreed. But please understand, trade deficit can be because of essential commodities as well as non-essential commodities as well. I'll repeat the statement. The trade deficit, or whenever you talk about balance of payments, etc., it could be because of essential commodities as well as non-essential commodities. Now, many of you will ask me, sir, what do you mean by essential commodity as well as non-essential commodity? Essential means we do not have sufficient production capacity in India. No option, we will have to import it. Is it okay? I'll repeat the statement. Essential commodity means production capacity is not sufficient. Hence, we are dependent on the imports. Can I give you one example? Crude oil. Please do let me know. Crude oil. How many of you are under the impression that India has sufficient production capacity for crude oil? Answer is no, by the way. We do not have sufficient capacity. Whereas on the other side, non-essential. Can I say current affairs example? Toys. Let me know. Toys, right? In the current affairs, are you people coming across newspaper articles where government of India is promoting consumption, production as well as consumption of domestic toys? Right, plastic toys, etc., etc. Why? Government says we have sufficient production capacity. Why should we import it? We should not import it. Right? We should be able to produce as well as consume in the domestic market only. So now question is the deficit because of essential? Then there is no option. Right? I hope you understand. If the deficit is caused because of crude oil, is there any alternative right now for you? Listen to me very carefully. Is there any alternative for you currently for essential commodity import? For example, crude oil. Is there any alternative? Over a long period of time, in a longer duration, yes, you can cut down the reliance on the crude oil. How? For example, is government of India not promoting production of, let's say, wind energy? Is it not promoting production of solar energy? Are we not promoting production of, let's say, electric vehicles? All of you able to understand this? But that is not going to happen in a very short duration. You cannot expand production of electric vehicles in a short duration. That will not happen. And even if you think of electric vehicles, some of you might simply say, yes, sir, we'll promote electric vehicles and that will take care of import dependence of crude oil. But if you promote electric vehicles, don't you think there is one more concern now? The promotion of electric vehicles, don't you think that will also promote more and more import of lithium into India? Let me see how many of you have read yesterday's article. I asked you to read one article, Kabil company. Right? Don't you think that will promote import of lithium into India? Because in India, 100% of the lithium that is consumed as of today, we are import dependent. 100% of lithium. Right? We are import dependent, which means we have to import more and more of lithium if I want to promote electric vehicles. So that's the reason I'm saying government is taking measures. I'm not saying government is not doing anything. Government is taking measures. For example, in the last couple of weeks, two of the lithium deposits. If you've read the newspapers, you will know this. Two of the lithium deposits have been put for auctioning. Right? Companies have purchased. Now we are expecting production of lithium in India, but that is not going to happen in a month. Do not expect everything will change in a matter of 15 days, etc., etc. Such type of, let's say, the disruption, quick disruption, positive disruption cannot be caused in a economy. Okay. So essential as well as non-essential. So the reason why there is a trade deficit, the reason why there's a trade deficit in case of India is because of essential as well as non-essential. Government is taking various measures to cut down our imports of essential as well as non-essential commodities. Can I go forward now? This is one concept of trade deficit. Now, one of the student is asking, sir, how can you have a balanced trade? My dear, I'm not saying there is a balanced trade in India. I'm saying there are three possibilities. All of you okay? Right? Let me know all of you okay with this. I'm saying there are three possibilities. One can be a balanced trade, another can be a trade deficit, third one can be a trade surplus. And various countries have a trade surplus, various countries have trade deficit. India has a trade deficit. Okay? Can we go forward now? Now, next concept of current account deficit, current account surplus. One, we have looked at only the trade. Now, let's look at the overall current account. We can have a current account deficit, we can have a current account surplus, or we can also have a possibility, a balanced current account. What is the meaning of it? Please look at it. Please look at the balance of payment, specifically the current account. Now, if the revenue side in the current account, if the revenue side in the current account is equal to the expenditure side in the current account, we say this is balanced current account. Is it okay? I'll repeat it. If you look at the revenue side of the current account and the expenditure side of the current account, and if number is same, that is dollars coming in is equal to dollars going out, we call it as a balanced current account. But on the other side, if there is a difference, that is revenue under the current account is more than expenditure side under the current account, then it simply means we are having a surplus current account or a current account surplus. For example, right? For example, let's say revenue side, remittances, right? Income, investment income because of exports of goods and services. Let's say hypothetically, you have received how many dollars have come into India? I'll take a simple number, $500. $500. And on the other side, expenditure. How many dollars have gone out of India? How many dollars we have paid to the rest of the world? Let's say $400. So $500 have come, $400 have gone outside. Can I simply say this is a current account surplus? All of you okay? This is a current account surplus. On the other side, if it is vice versa, if this is $800, if the revenue, that is dollars going outside India, are $800 and we are receiving for $500, can I simply say there is a current account deficit, CAD, current account deficit of $300. Now, very simple question to all of you. Please do let me know, can the current account deficit influence exchange rate? Let me see. Can the current account deficit influence exchange rate? Because this was one of the points yesterday that we have not discussed. I'll repeat the statement. This was one of the points that yesterday that we did not discuss. I said tomorrow you will understand when I discuss balance of payment. Now please tell me, can the current account deficit have an influence over the exchange rate? Of course, yes. Of course, yes. Right? And some of you will ask, in that case, even import and export will have influence. Yes, we have written it in the slide. Even imports and exports will have an influence. Yes, of course, yes. Right? Even current account will have an influence over the exchange rate. When dollars are going out or net dollars are coming in into India, of course, yes, it will influence exchange rate. Right? So current account deficit, current account surplus, and balanced current account. Now, what is the situation in India? Sometimes India experiences current account deficit. Sometimes India experiences current account surplus as well. It has experienced current account surplus. I cannot simply say it has never experienced current account surplus. We have experienced current account surplus very recently also. But for majority period of the time, generally India experiences a deficit in the current account, that is CAD. Now have a look at this. When you have a deficit in the current account, can I simply say there is a net outflow of dollars under the current account from India to rest of the world. Now question is, if there is a net outflow of dollars, if I have to pay extra $300, from where will I get these extra $300? From where do I get these extra $300? Because I cannot print dollars in India. RBI cannot print dollars in India. That's a fact. So from where? From where will I get this particular $300? We generally get it because of surplus in the capital account. We generally get it because we experience a surplus in the capital account. What do you mean by surplus in the capital account? Same logic. Even in the capital account, dollars are coming in because of transactions and dollars are going out because of certain transactions. What if I say this side, that is a dollar coming in the capital account is, right, I'll throw arbitrary number, $1,000, and expenditure side under the capital account is, let's say, $300. So now please do let me know, $1,000 coming in, $300 going out. Can I simply say, in this example, we have a surplus. We have a surplus in the capital account of $700. We have a surplus in the capital account of $700. So, which also means, what does it actually mean? It simply means we are receiving extra $700 into India under the capital account. Can we use excess of these, surplus of these dollars to take care of current account deficit? Of course, yes. If $700 are coming into India, extra $700, these extra dollars can be utilized to bridge the current account deficit. All of you okay with capital account and current account deficit, surplus and balanced? Please do let me know. Capital account, current account, surplus, deficit and balanced. Anybody has any issue? Now, next point, look at the overall balance of payments. Please look at overall balance of payments. Full table now, full table. The balance of payments, again, there can be three situations. You can have one, balanced balance of payment. You can have a balance of payment surplus, or you can have a balance of payment deficit. You can have balance of payment deficit, BOP deficit, BOP surplus and balanced BOP. Logic is same again. If the overall inflow of dollars, overall current account, capital account, if the total inflow of dollars in the balance of payment is equal to total outflow of dollars, we'll simply call this as balanced balance of payment. That is $100 you will get, $100 you will pay. Balanced balance of payment. Now, what if it is anything apart from this? It's not balanced. Then it can be a surplus, it can be a deficit as well. Surplus means what? Under the current account and capital account, under the revenue side, that is dollars inflowing, it is excess. The dollars coming into India are excess more compared to dollars going out of India. That is a concept of surplus balance of payments, right? BOP surplus. On the other side, if dollars going out, dollars flowing out of India are greater, India pays more dollars than what it receives, then that is called as a BOP deficit. So BOP deficit, BOP surplus, and balanced BOP. Generally, in the context of India, we generally experience BOP deficit also, and we have experienced BOP surplus also. Now, next important point, listen to me very carefully now. Imagine there is a BOP deficit. Imagine there is a BOP deficit. What is the meaning of BOP deficit? Can I simply say, I'll take a simple example now. Can I say that if there is a BOP deficit, if there is a BOP deficit, it simply means the amount of dollars that India has to pay to the rest of the world, if these are $2,000, if these are $2,000, and if they are receiving only $1,000 or let's say $1,200, can I call this as a BOP deficit? Anybody has a problem with this? Amount of dollars that India will pay to the rest of the world, that is dollars going out of India, are $2,000 and dollars coming into India are $1,200. Can I call this as a BOP deficit? Let me know. Can I call this a BOP deficit of how much? $800. Now, question is, from where will I get these $800? From where will I get these $800? Then we start using forex reserves. Then RBI will use a forex reserves. What does RBI do? RBI has a forex reserves. And what is there in the forex reserves? In forex reserves, we have dollars, we have pound, we have gold, we have a reserve tranche position, we have STRs, etc. Now, RBI will use these dollars, sell these dollars in order to ensure that sufficient dollars are available in the market. In order to ensure that sufficient dollars are available in the market. Now, let's imagine a situation. The forex reserves that RBI has, I repeat, the forex reserves that RBI has, in order to bridge the BOP deficit, all the forex reserves will get over. RBI will use everything that is there in the forex reserves, even after that, if there is a BOP deficit. Is the logic okay with all of you? I'll repeat it again. If RBI will exhaust all of its forex reserves, and even then there is a deficit, this is called as BOP crisis. This is called as BOP crisis. In simple words, in simple terminology, the central banker will exhaust all the dollars, all the forex reserves to bridge the deficit. This situation is called as BOP crisis. This is called as BOP crisis. And the last time that India faced a BOP crisis was back in 1991. The last time India faced a BOP crisis back in 1991. After that, we have not faced any kind of BOP crisis. Now, all of you able to connect the dots? Sir, how? Right? What are you talking about? Did you people read the article regarding role of RBI in BOP crisis that was there in Hindu newspaper day for yesterday? Let me see. Did you people read the role of Reserve Bank of India? Right? It was in fact about Mr. Venkati Raman, but again, role of RBI in order to address the issue of a BOP crisis that India faced back in 1991. It was the day for yesterday, Hindu newspaper. I presume that all of you are reading Hindu newspaper, right? If not, read one newspaper at least. Okay. Now, forex reserves will be utilized by Reserve Bank of India to address the issue of BOP deficit. The last time India faced a BOP deficit was back in 1991, and after that, After that, no, we have not faced any kind of BOP crisis. And some of you will simply say, sir, if there is a BOP crisis, what can a country do? Very simple. Country will borrow. If you do not have sufficient dollars, what will you do? You have to pay dollars. You don't have sufficient dollars. What can you do in that case? Borrow. That is exactly what we did. We borrowed from various other central banks. We borrowed from IMF, etc. And in recent times, have you seen Sri Lanka facing BOP crisis? Pakistan facing BOP crisis? All of these terminologies are there. All of these terminologies are there in the newspaper. And tell me, when Pakistan faced BOP crisis, what did they do? They approached IMF. They simply approached International Monetary Fund, because under IMF, if a member country will face a BOP crisis, they are allowed to borrow from IMF. So exactly that is what we did earlier, but today we are not doing it. Why? Please look at the data now. As per the latest publication of RBI, the forex reserves that India has is more than $620 billion. The forex reserves that India has is more than $620 billion. And RBI says this forex reserves is more than sufficient to take care of any of the payment liabilities for us. It is more than sufficient. It is more than sufficient to take care of any kind of dollar supply. In case there is a need, we can easily do it. Can we go forward now? Can we go forward? Right, so all of you okay with this? Why did India send gold? My dear, they pledged. They gave collateral. Very simple. They pledged gold. They gave it as a collateral to borrow. Right, again, do not be focused too much about gold pledging. Right, they pledged gold to borrow. That's a very simple argument. Okay, can we go forward? So forex reserves. Now let me know if UPSC will ask you who will conduct official sale of forex reserve. Suddenly UPSC will ask you this question: who will conduct official sale of forex reserves? What will be your answer? In India, who will conduct official sale of forex reserve? RBI. Just now we have discussed this. Reserve Bank of India. Right, Reserve Bank of India. Now there is one more set of terminology. In NCERT it is given. One term is called as autonomous transaction. In balance of payment, they will call this as autonomous transaction. Autonomous means independent. Autonomous generally means independent. And the second one is called as accommodating transaction. Autonomous and accommodating. Now, is it okay? Please look at this example. Is it okay if I say RBI will conduct a sale of official reserves, sale of official forex reserve in order to bridge BOP deficit? Correct? Official sale of forex reserves is done by RBI to bridge BOP deficit. Such a type of transactions are called as accommodating transactions. Such type of transactions are called as accommodating. Accommodating means it is not independent. It is done in order to achieve something. It is not an independent transaction. This transaction has been done in order to do something in the balance of payment. Accommodating transaction. Whereas import and export, can I call this as autonomous transactions? Does it make sense? Imports and exports, remittances coming in, remittances going out. All these are autonomous transactions. These are independent. They'll keep on happening, right? Without any particular objective for RBI. Right, so one is autonomous and the second one is accommodating transaction. Okay, so this is a discussion regarding concept of balance of payment. Now, let's say there is a balance of payment. How do you address it? If there is a balance of payment, how do you take care of this balance of payment? Now, let's go point by point. Point number one, you can increase the exports. You can increase exports from a country. That will lead to inflow of dollars, and this will help us. This will help us in addressing the balance of payment deficit. One is increase exports. Second one is reduce imports. Reduce imports, but all the imports, it's very difficult for you to reduce all the imports. Very difficult. So what you can do in that particular case, rather than targeting all the imports and reduce all the imports, can you target only the non-essential imports and reduce them? Is it okay? Can you target only the non-essential imports and reduce them? Right? So because all the imports, some of them are essential imports. There may not be any alternative for you. There is no other option for you. So you will have to import essential, but at least non-essential, can you target? Can you reduce? And is Government of India doing it? Answer is yes. Please be very careful. Government of India is trying to do everything in this particular recommendation. For example, earlier we used to import a lot of products from China, essential as well as non-essential. Government of India is trying to control, right, all of these imports into India. All of these imports into India. So decrease imports, increase exports, reduce non-essential import, and doing the first one as well as the third one simultaneously. Right? Do the first as well as the third simultaneously. Increase exports as well as reduce non-essential imports. Encourage more and more FDI and FII. Let me know, is Government of India doing this also? Is Government of India not encouraging foreign investments in India? I'll give you one example. Please do let me know. Production linked incentive. Let me see. Have you heard of production linked incentive? Can I say PLI is doing the first, is doing the second, it is also trying to do the third, fourth as well. Fifth. 1, 2, 3, 4 as well as 5. We'll discuss PLI today. Don't worry. We'll discuss RODTEP. We'll discuss PLI. All these important schemes we'll discuss. So all of you okay with this? And Make in India initiative, Startup India initiative, right? All these multiple schemes have been implemented by the government in order to promote exports, in order to reduce import dependence, in order to attract a lot of investments in India. Currency devaluation. You can go for currency devaluation, but please understand, India following a floating exchange rate, think of it and do let me know. India following a floating exchange rate, can you go for currency devaluation? Can Government of India go for devaluation of rupee? Answer is no, you cannot go for devaluation. Why? You are following a floating exchange rate. The last time we went for currency devaluation was during BOP crisis back in 1991. After that, we have not gone for devaluation. And many countries in recent times have devalued their currency. Reason being, they are facing crisis. Whenever the countries are facing crisis, they are allowed to go for devaluation. But a country such as India, countries such as China, we are not supposed to go for devaluation. In fact, there is an allegation, underline this term. In fact, there is an allegation that China devalues its currency. China devalues its currency. But again, it's just an allegation. There is no concrete proof. Even IMF has said no, China doesn't go for devaluation of its currency. And some of you will start asking me, what is the impact of devaluation? Yesterday, I've told you this. Whenever the country will go for devaluation, and if the country is an exporting country, right, or if they want to control imports, right, automatically devaluation will help them. How? With the devaluation, exports will become more competitive. Correct? Exports will become more competitive. Whether exports will increase or not, it depends on other countries also. Exports will become more competitive and imports will become very costly. So can you control the imports and also promote exports with the devaluation? Answer is simply yes. Right? Answer is simply yes. But more importantly, think of it. Don't you think with currency devaluation, the inflow of dollars into a country from their diaspora, from, let's say, diaspora means citizens who are living outside, the inflow of dollars from the diaspora will automatically increase. Let me prove it. Listen very carefully. Whenever there's a currency devaluation, inflow of dollars into a country from their respective countries' citizens who are living outside the country, diaspora, right? Their inflow of the dollars will increase. How so? You think of it. Imagine you are a software engineer, very, very important software engineer. You are located in USA now. Now think of it. Right now, dollar value is 50 rupees. Simple example to make you understand. Government will devalue the currency to $1 is equal to 60 rupees. $1 is equal to 60 rupees. Simple question to all of you. If you send $1 after devaluation to your parents, are they not receiving more rupees compared to yesterday? Think of it and do let me know. Right? If you send $1 right yesterday and $1 today, are your parents not receiving more rupees today compared to yesterday? If a company will borrow $1 today compared to $1 yesterday, are they not getting more rupees today? I hope you understand. If you invest in India, $1, if you invest in India, yesterday and today, are you not investing more rupees today compared to yesterday? So I hope you understand. And please look at this very carefully. Rather than borrowing $1, rather than RBI government borrowing $1, they would prefer dollar coming into India in this way. That is remittances. That is let's say investment income. That is let's say interest income because of exports, etc. Because whenever dollars will come like this, these are not creating any liability of repayment in the future. All of you okay with this? Whenever dollar will come into India because of these transactions, there is no repayment in the future. The point I'm trying to make here is very simple. Can government of India borrow from RBI $1? Sorry, can government of India borrow from IMF $1? Yes. Can they borrow from New Development Bank $1? Yes. Dollar can come into India that way also. But this transaction in future, there is outflow of dollar. All of you okay? In this transaction, in future, there is a outflow of $1. But if you send your parents $1 today because of devaluation of Indian rupee, right? Is there a repayment liability in the future? Do you think you will get that $1 from your parents in the future? Will you demand interest on that $1 from your parents? No. I hope you understand these kind of right travel tourism inflow, remittances, that is a payment to your parents, money transferred to your parents, relatives, a spouse, etc. These kind of inflow of currencies will always be beneficial for a country. Right? At least now all of you okay? Why government of India wants more and more in remittances? Why government of India says we are the largest recipient of inward remitter and this is good for us? All of you okay with these arguments? Right? So currency devaluation, long-term way out is always to promote exports. Promote more and more exports. That is the best way out. Promote more and more exports. Why? Please think of it. Some of you will simply say, sir, by reducing imports, I can control deficit. By promoting exports, I can control deficit. But why should you prefer? Why should you prefer promotion of exports over reducing imports to control BOP deficit? Reason is simple. Whenever you promote exports, point number one, automatically inflow of dollars will increase. Inflow of dollar will increase. Point number one. Point number two, please do let me know. If you're promoting more exports, it also means you're producing more in India. Correct? If you're promoting more of exports, it automatically means you're producing more in India. Don't you think your contribution to GDP will also start increasing? Your GDP might also start expanding. You're producing more also means employment generation in India is more. Correct? Employment generation in India is also increasing. Is it not beneficial? So always remember this long-term way out to address the BOP deficit. The best way out to address the BOP deficit is always to promote exports. Promote more and more exports. It will have a huge multiplier effect to the Indian economy. So these are some of the measures that can be taken in order to address the issue of BOP deficit. Can we go forward now? Anybody has got any kind of doubt, please do let me know. Can we go forward? Huh? Anybody has a problem regarding what we have discussed so far? Please do let me know. Trade deficit deal with the service and goods part of BOP. Trade deficit deal. Of course, yes. Whether you are having a trade deficit or trade surplus, it is always part of BOP only because please look at the balance of payment table. A trade deficit as well as a trade surplus are associated with imports and exports, and it is part of current account, and current account is part of BOP. Okay, sir, is the trade of invisibles the same as trade in services? Invisibles are multiple types. Invisibles means anything that you cannot see is called as invisibles. Services are part of invisibles. Does devaluation affect importing countries? Yes. Yes, devaluation will definitely have an impact on importing countries. If government of India will go for devaluation, government of India will go for devaluation, your imports will become very, very costlier. Imports will become very, very costlier. What is accommodating transaction? I'll repeat it again. Autonomous means independent. These are going to take place in an economy without any issue, without any prompting. Nobody needs to promote it. Right? These kind of transaction will keep on happening. For example, imports as well as exports. They will keep on happening in the balance of payment. But those are transactions which are done to achieve an objective in the balance of payment. These are called as accommodating transaction. Accommodating means to achieve something, right? So whenever you will conduct these transactions, for example, RBI selling forex reserves. Why do you think RBI sells forex reserves? Because RBI feels there is a BOP deficit. Is it good to have trade deficit as expenditure is more on developmental activities? I'll repeat it again. Whether you have a trade deficit, whether this is good or bad, depends upon whether it is because of import of non-essential commodities or is it because of import of essential commodities. Essential commodities, you will import it because you do not have sufficient production capacity in India. There is no option, there is no alternative, you'll have to import it. But what if I say, imagine a simple example, imagine extreme, but just to make the point, what if the trade deficit that India has, what if the trade deficit that India has is because of import of toys from China? Think of it, right? Extreme example, right? I know it's an extreme example. What if the trade deficit that India has is because of importing toys from China, right? Would you prefer this kind of a trade deficit? Of course no. Why? These are not essential commodities. But on the other side, if your trade deficit is because of import of crude oil, what is your other alternative to that? What is your solution to that? You want to reduce the trade deficit, but what is the solution? Do you have any other alternative to crude oil right now in India? Do you have sufficient production capacity? No. Right? So that will determine whether should we have this kind of trade deficit or not. Okay, let me go forward. Okay, next is the concept of convertibility. Now what is this concept of convertibility? Convertibility simply means how easily, how freely, how easily or how freely. Freely means what? Without any conditions. Without any conditions. How easily or how freely can you convert the domestic currency into foreign currency and vice versa? I'll repeat the statement. What is this concept of convertibility? Again, I'm talking in the concept of forex market. Don't take convertibility somewhere else and say, but sir, in that subject they discuss this, right? In this subject we discuss this. No, I'm talking about forex market. Whenever you talk about convertibility in the forex market, what does it mean? How easily or how freely, without any conditions, can you convert your domestic currency into foreign currency and foreign currency into the domestic currency? That is called as convertibility. And remember this very carefully. In India, we have full convertibility. I'll explain, have patience. In India, we have full convertibility in the current account and partial convertibility in the capital account. Now let's start. What is full convertibility? What is partial convertibility? Let me start with a very simple example. And let me ask you a question now. How many of you think there should not be any conditions? I repeat, there should not be any condition or limitation on foreign investors investing in bond market in India. Let me see. I'll repeat the statement. how many of you think there should not be any conditions, no limitation, no condition whatsoever on foreign investors investing in bond market in India? Of course, yes. If there are no conditions, no limitations, bond market will attract a lot of investments. But please understand, if there are no conditions, underline the term if there are no conditions, no doubt, lot of foreign investors will bring money into India, convert that into rupees. They are dollars, convert that into rupees, invest in the bonds. Now, please tell me, what if Fed tapering happens? Let me see how many of you remember yesterday's discussion. Right? Let me ask a very simple question. What if Fed tapering happens? As a result of Fed tapering, will it not create high volatility in the bond market? Yes or no? Will it not create a very high volatility in the bond market? Volatility means prices will be varying a lot. Instability is created. All of you okay with this argument? All of you okay? Anybody has a doubt? Right? Yesterday we have discussed Fed tapering. When Fed tapering is done, interest rates in USA will start increasing. Investors in other countries such as India, they will withdraw their money, sell the securities, withdraw the money, and go to USA, invest in USA. But in the process of selling the instruments, imagine there no conditions were there. Lot of them have purchased a lot of government bonds, lot of corporate bonds. Now they'll simply sell these bonds. Don't you think there will be instability, volatility created in the bond market as well as forex market because of this? So now tell me, based on this understanding, now tell me, should there be any condition? Should there be any limitation on their investments in India? Answer is yes. Very simple. Answer is yes. And are there limitations in India? Again, answer is yes. And what kind of limitations are there? It will keep on varying from one bond instrument to another bond instrument. There are limitations. You don't worry. It is sufficient for you to understand there should be limitations. Otherwise, whenever external events will take place or internal events will take place, there can be large volatility, instability created in the bond market, which is not preferable. Would you prefer government bond prices to suddenly crash? Think of it. Would you prefer government bond prices to suddenly crash in the Indian market? No. Why? Government bonds, sovereign guarantee is there. That will create a lot of panic in the market. Right? So argument is simple. There should be conditions. There should be limitations. Now please tell me, if I impose a limitation, does it not mean, if you're a foreign investor, does it not mean you cannot freely convert all your dollars into rupee and vice versa? Is it okay? Does it make sense now? If there are conditions or if there are limitations on you, you're a foreign investor, does it not mean that there are conditions, right? You cannot freely convert. You cannot freely convert your dollars into rupees and vice versa. This is called as, right, partial convertibility. This concept is called as partial convertibility. That is, you cannot freely convert. There are conditions. You cannot freely convert all your currencies into a domestic currency and vice versa. Conditions are imposed. Now, let me add one more point here. ECB, external commercial borrowings. Under ECB, are there limitations? Right? A couple of, some time ago, even that was not allowed. Even ECB was not allowed. Now we are allowing ECB. But tell me, under ECB also, is there a limitation? Is there a limitation? Of course, yes. Right? Just because ECB is available, can you borrow $5 billion from rest of the world? Not allowed. Just because ECB is there, can you borrow $8 billion from the rest of the world? Absolutely not allowed. There are limitations. There are conditions. So now do let me know, all of you okay, if I say, in case of capital account, we are worried about instability. We are worried about volatility that might happen. That might happen because of external as well as internal situation or events. And that is a precise reason in capital account, even today, we have partial convertibility. Even today, in case of capital account, we have partial convertibility. In fact, there have been committees. Remember the name of the committee? SS Tarapore Committee. SS Tarapore Committee. There have been committees. SS Tarapore Committee 1 is there, 2 is there. SS Tarapore Committee recommended that we should move towards full capital account convertibility. We should have full capital account convertibility. But RBI even today says we are worried. We are concerned. If I have a full capital account convertibility, then it simply means if there is a global shock, if there is an event like global financial crisis, the instability that it will create in India will be unmanageable. It can create a chaos in the Indian market. That is the reason even today RBI says we will have partial convertibility. But please understand, RBI slowly and steadily is implementing reforms which will help us moving towards full convertibility. It is saying, look at my statement now. Please look at the statement. Achieving full convertibility is a process, not an event. The RBI governor, in fact, used this statement. Achieving full capital account convertibility is a process, is not an event. All of you are able to understand the meaning of the term process and event? Event means in one shot like this. Event simply means one shot. In one time period, we will achieve it. Right? Just like today, let's say. Event. Process means it will take time. It will simply take time. You cannot do it in one shot. It will simply take time. So RBI governor, even RBI is of the RBI board is of this viewpoint that it is a process, not an event. Achieving capital account convertibility is a process, not an event. So anybody has a problem regarding capital account convertibility, please do let me know. Now let me go to current account. In current account, right now we have full convertibility. In the current account, right now we have full convertibility. Right? That is any currency that you receive for a transaction under the current account, you can freely convert them into domestic currencies and vice versa. Meaning what? Imagine you are exporting. You will receive $1,000. Without any restriction, without any condition, you can convert them into rupees. Sir, what if I receive $1 million? No issues. Go to the forex market, sell $1 million, equivalent amount of rupees you will receive. You will receive, let's say, $1 billion. Any restriction? Again, by exporting. Government says no restriction. Please go to the forex market. Sell your dollars, whatever is the exchange rate, equivalent value of rupees, you will get. Same way in case of imports also. Government says you want to import it, import it. You want to convert your rupees to dollar, convert it. I will not impose any kind of restriction. So in case of current account, we have full convertibility, but in case of capital account, we have partial convertibility. Now in current account, I've written one term here, LERMS, Liberalized Exchange Rate Management System. Right? We have introduced the concept of full convertibility post 93 and 94 in India. But before that, before introducing full convertibility in the current account, we had a partial convertibility system which was referred to as LERMS, Liberalized Exchange Rate Management System. Now, what is this Liberalized Exchange Rate Management System? Understand this carefully. Under the Liberalized Exchange Rate Management System, whenever you received any dollars, whenever you want to convert dollars into rupees like this, you were supposed to convert these using two exchange rates. I'll repeat the statement. Whenever you wanted to have a conversion like this, let's say you have received dollars, now you want to convert the dollars into rupees, you were supposed to follow two exchange rates. One, the market exchange rate. Whatever is the market exchange rate, use that and convert currencies. Second one was notified exchange rate. That is decided by the government. Notified exchange rate. Now, how the conversion was done earlier, let me give a very simple example. Listen to me very carefully. Whatever dollars were there, you were supposed to convert that in this format. 40% of the dollars you were to convert at a notified exchange rate, and 60% of the dollars you are supposed to convert at market exchange rate. For example, imagine, just take a simple example. Imagine market exchange rate is $1 is equal to 50 rupees, and notified exchange rate by government of India was, let's say, $1 is equal to 40 rupees. And imagine you have received $200. You have received $200. Now, how will you convert these $200? Divide them into two parts. 40% will become $80 and 60% will become $120. So notified exchange rate, $1 is equal to 40. So if there are $80, I'll directly write now, CSAT, I'll directly write $1 is equal to 40 rupees. $80, can I write it as 3,200 rupees? Those who will have a doubt, take out the calculator, start calculating, you will get it. 60% is $120. $1 is equal to 50 rupees. So for every dollar, if you get 50, for $120, you will receive 6,000 rupees. So under this new system, under the LERMS, you would be getting 9,200 rupees if you have received $200. And again, these are hypothetical calculations. I'm saying notified, hypothetically, imagine it, right? The market, imagine it, because you don't have to remember what was the exact exchange rate back in 92. You don't have to remember that. It's of no use for you. So this is how earlier liberalized exchange rate management system was implemented, where two exchange rates were used to convert the currencies from one form to another form. Now, please do let me know one more name for LERMS. One more name for LERMS is a dual exchange rate system. All of you will be able to understand why this is called as a dual exchange rate system. Anybody has a problem? Let me know. One more name for liberalized exchange rate management system was called as a dual exchange rate system. And if you ask me, sir, why did government of India implement such a system? Reason was, earlier we were facing the BOP crisis. We did not have sufficient forex reserves. So we wanted to protect, we wanted to monitor and ensure whatever dollars are getting converted into rupees, rupees to dollars, it is done appropriately. We'll be able to reserve, or we will be able to have sufficient dollars. And after that, right, no, 93, 94, we have shifted to full convertibility. Today, in current account, we have full convertibility. Whereas in the capital account, we have partial convertibility. Can we go forward now? Anybody has any kind of issue regarding what we have discussed so far in the balance of payment? That is basically BOP, the concepts related to BOP. Anybody has any concern, any issue, please do let me know. Otherwise, I'll go forward. What is FII? FII stands for Foreign Institutional Investors. Foreign Institutional Investors. What do you mean by institutions? Can I say insurance company is a financial institution? A mutual fund company is a financial institution. So just like we have financial institutions in India, there will be financial institutions outside India also. So when these financial institutions will invest in India, these are called as foreign institutional investors. Okay, at what foreign exchange rate use in full convertibility? In full convertibility, whatever is the exchange rate right now, that exchange rate is used. Yesterday exchange rate was $1 is equal to 82. That will be used. Today it could be $1 is equal to 81. That will be used. Tomorrow it will be $1 is equal to 85. That will be used. Whatever in full convertibility, whatever is the exchange rate in the market, that will be utilized. Okay. Now next concept, foreign trade policy 2023. Important one. Please listen carefully. Important one. Now, what is this foreign trade policy 2023? Let's go point by point. Earlier, earlier we had a foreign trade policy 2015 to 2020. I'll start using FTP. All of you okay with the short form of foreign trade policy? Foreign trade policy, I'll say FTP. Short form is FTP. So generally the convention, there is no rule, there is no constitutional provision for this. Okay. Generally the convention is that foreign trade policy is announced once every 5 years. Foreign trade policy is announced once every 5 years. The previous foreign trade policy was supposed to be implemented from 2015 to 2020. The previous one was supposed to be implemented from 15 to 20, 5 years. But in 20, all of you know what happened. Right? Anybody has a doubt what happened in 2020 and 21 in India? So government of India, looking at the situation, said, we will not announce a new foreign trade policy. Why? Pandemic is there, corona is there, there is a lot of volatility, uncertainty in the economy. So what we will do is, we will continue whatever scheme we have, we will continue the same policy. That is the precise reason a new foreign trade policy was supposed to be announced in 2020. It was not announced. The same FTP was continued, expanded, right? The application was expanded till what? Till 2023. Till financial year 23, it was continued to be implemented. And last year, again, when I say last year, calendar year, last year, Government of India has come out with a new foreign trade policy, which is applicable starting from financial year 2023. Now, if you make an observation, earlier I said it is applicable from 2015 to 2020. Now I've simply written foreign trade policy 2023. What is the meaning of it? Government of India now says we will discontinue the convention of having FTP for 5 years. We will discontinue. Discontinue means what? Henceforth, every 5 years I'm not going to announce a new foreign trade policy. Whatever foreign trade policy I'm going to announce now will continue to be implemented. Whenever changes are required in the policy, I'll make the changes in the policy, but the same policy will continue to be implemented. All of you able to understand this? All of you able to understand the difference? Yes or no? Please do let me know right now. Earlier convention was 5 years. After 5 years, we'll announce a new one. Now government says not required. Same policy, right? Same policy will continue, right? I will withdraw when I want to withdraw, right? Not after 5 years. But what I'll keep on doing is, if there is a need to make changes in the policy, a scheme has to be withdrawn, I'll do that. A new scheme has to be introduced, I will do that. But the same policy will continue to be implemented. That's very, very important. Please be very careful. Please be very careful. So FTP 2015 to 2020 and FTP 2023. Now, before I go forward, I'll use certain important provisions under FTP 2015 and 2020 because you need to understand them. Earlier, under FTP 15 and 20, we had two very important schemes. Merchandise exports from India scheme. Merchandise exports from India scheme. Exports from India scheme. And there was one more. Service exports from India scheme. Now, please do let me know. Can I write a short form? First scheme will be called as MEIS. First scheme, right? Short form will be MEIS. Second scheme, short form will be SEIS. Any problem? First scheme, MEIS. Second scheme, SEIS. So, Government of India in the earlier FTP introduced two very important schemes: merchandise exports from India scheme and service exports from India scheme. And what was the logic of both MEIS and SEIS? Government would provide subsidies. Government would provide incentives in order to promote more and more exports. How, sir? Let me give a very simple example. I am manufacturing this bottle. I will export it at 100 rupee. Now, please tell me, if government will give me a subsidy of 10 rupee, don't you think automatically the export price of the bottle I'll reduce, so that my exports from India will also increase? Anybody has a doubt, please do let me know. Why I'm talking about all of this? There's a case. We were dragged. India was a drag to WTO. India was a drag to WTO, right? Very often this is cited in the newspaper, right? So again, I'll repeat it. Under MEIS and SEIS, incentives were provided. Incentivization, subsidization of exports was done. And what was done? If I export a product which was covered under either MEIS or SEIS, certain amount of subsidy was given to me. And when subsidy is given to me, automatically my competitiveness of exports will increase. Exports will also increase. Now, what is the problem with this kind of a scheme? What is the problem? If I have a scheme, what is the problem then? Problem is simple. India is a signatory. India is a signatory to one of the agreements under WTO, very, very famous. There is an agreement on subsidies, and countervailing measures. Agreement on subsidies and countervailing measures. In short, it is referred to as SCM, countervailing measures. In short, it is referred to as SCM, agreement on subsidies and countervailing measures. And what does this agreement on subsidies and countervailing measures say? India is a signatory. India signed this. What does this agreement say? If a country achieves certain certain the per capita income above threshold. I'll repeat the statement here. I think I've written the statement. Let me show it to you. I'll go back to previous slide. Please don't worry. Don't say, sir, you're skipping. Right? So the agreement simply says, where is that? Agreement on subsidies and countervailing measures. The agreement simply says, if any member country achieves a per capita national income of more than $1,000 for 3 consecutive years. I'll repeat the statement, understand this carefully. If any member country achieves a per capita national income of more than $1,000 for 3 consecutive years, then under this agreement, such a country cannot provide export linked subsidy. I'll write it. Such a country cannot provide export linked subsidy. All of you okay with the term export linked subsidy? Please do let me know. If I'm exporting this bottle and the value of the bottle is, let's say, 100 rupee, and government will give me 10 rupee, which is again connected to value of bottle, can I call this subsidy as export linked subsidy? Anybody has a problem? Can I call this 10 rupee subsidy as export linked subsidy? Answer is yes, by the way. You should not have any doubt. If you're still having doubt, 1 bottle 10 rupee, 2 bottle 20 rupee, 3 bottle 30 rupee, because it is connected to the value of the bottle. So these are called as export linked subsidies. So any country whose per capita national income is more than $1,000 cannot provide export linked subsidies. That is the provision under the agreement on subsidies and countervailing measures. And India's, right, remember this, India's per capita national income crossed more than $1,000 in 2013. India's per capita national income crossed more than $1,000 in 2013, and since then it has been more than $1,000, right? It's been more than $1,900 in fact now. So now let me know, think of it. You have signed an agreement which says if you cross $1,000, you're not allowed to provide export linked subsidies. On the other side, you are providing export linked subsidies by implementing MEIS as well as SEIS. Don't you think any other member country will challenge you under WTO? Correct? Member countries of WTO will challenge your subsidies. They will drag you to WTO, file a complaint against you saying that this country, look at it, this country per capita national income is more than 1,000, but they are giving export linked subsidies. Exactly this is what happened. USA dragged India to WTO. USA took India to WTO. What will happen? What is the process, etc.? You'll understand it later. Have patience. Next concept is WTO only. I'll explain all of it. But under WTO, it was found that yes, India is violating the provisions. We are not having a fair trade policy. We are having unfair trade policies. So it was found that India is violating the provision of the agreement on subsidies as well as countervailing measures. That is the precise reason. Service exports from India scheme discontinued. Government of India has discontinued it. Merchandise exports from India scheme discontinued, and today we have a scheme called as RODTEP. Have you heard of this? Let me know. Current affairs. I'll discuss it today. But have you heard of RODTEP? Government of India has implemented from 2021, 1st January 2021, RODTP. Now, do not worry. What is the extension, sir? What is done under RODTP? I'll explain it. Have patience. But now I'll connect it to one more current affairs point. Government of USA has stated that even RODTP is an export linked subsidy scheme. Government of USA has contested that even RODTP is an export linked subsidy scheme. And under SCM, India is not supposed to provide. So they have imposed countervailing duties on some of our exports. They're yet to take us to WTO. They have stated that you are giving subsidies, but under SCM, you're not supposed to give subsidies. So we will identify some of your products and we will impose anti-subsidy tariff, anti-subsidy duties. Right? This was there in the Hindu newspaper as well. 4 products, 4 Indian exports have been identified by the USA government as well as European Union governments, and they have imposed countervailing duties on these products. Right? So this is there in the current affairs. Please be very, very careful. In some time, give me some time, we'll discuss even RODTP as well. We'll discuss RODTP. Don't worry. Okay. Now, right, the policy, foreign trade policy 2023, it is focused on boosting India's exports. We want to achieve $2 trillion worth of exports by 2030. The scheme is open-ended. The scheme is open-ended. Means what? There is no expiry date for the scheme. Right? There is no expiry date. There is no expiry date on the scheme. It is an open-ended. It will continue to be implemented. There is no sunset provision. Sunset means expiry date. So there is no sunset date or expiry date. It will continue to be implemented. But please understand the schemes within the policy. Schemes can be time bound. Schemes can be implemented. Schemes can be extended. Schemes can be withdrawn, etc. Now, what are the very important provisions? Very, very important provisions under the new foreign trade policy. Let's go point by point. Incentives to remission. Incentives to remission. Now, please do let me know. All of you will agree if I say under MEIS and SCIS, we were providing incentives, that is subsidies were given in the form of incentives. Please do let me know. Under MEIS and SCIS, I'll go back to previous slide. Please don't panic. Can I simply say we were providing incentives, right? That is subsidies were given in the form of incentives. But under the new foreign trade policy, government says, no, we will not give incentives. We will go for remission. Remission means returns. Remission means anything that you have paid will be given back to you. Please understand, remission means reduction. Right? So remission policy will be used. Now, how remission will be used? Let me prove it with one scheme. Remission of duties or taxes on export products. Listen carefully. Very interesting concept, but you will have to listen very, very carefully. RODTP, remission of duties or taxes on export product. Now, what is this RODTP? How different? How different, according to Government of India, RODTP is compared to MEIS or SCIS? Let me explain it. Listen very carefully. Now, point number 1, we have implemented GST. It's a fact. I'm not asking you. It's a fact. We have implemented GST. 1st July 2017, we have implemented GST. Point number 2, even though we have implemented GST, even today there are certain products on which there is no GST. Correct? Even today there are certain products on which there is no GST. Point number 3. If a product does not have if a product does not have a GST, then there is no way you will get input tax credit if you pay taxes on this product. All of you are able to connect the dots? First, we have implemented GST. Even though there is GST, certain products even today attract taxes which are not GST. And if it is not GST, there is no way you are going to get input tax credit. I'll take a very simple example. Let's say petrol. Let's say petrol. Now let's start. Imagine you want to manufacture this and you want to market it. You want to export it. But in the process of exporting, you have purchased petrol. You have paid taxes on the petrol. You have paid taxes on petrol. Now the fact is, because you have paid taxes on petrol, that 10 rupee tax, assuming 10 rupees is the tax, government will not give you any input tax credit on that. Government will not give you any ITC on that 10 rupee tax that you have paid on petrol. Now please do let me know, when you decide the market price of the bottle to export it to USA. I'll repeat the question. When you decide to export the bottle to USA and you decide the market price, will you not include the taxes that you have paid on petrol? Correct? Will you not include the taxes that you have paid on the petrol in your market price? You will include it. You will include it, right? Do not say, right, yes, no, sir, I will not include it. I'm very good exporter. I do not want to transfer the taxes, etc. No, you will include it. Why? If you do not get input tax credit, why will you pay the 10 rupee tax from your pocket? You will collect it from customer. And in this example, if you're exporting this bottle to USA, don't you think anybody who will purchase in USA, he will have to pay for those taxes? The person, the consumer in USA who will purchase the bottle will have to pay for these taxes. So in simple terms, your product, the market price of it includes taxes. Includes the taxes. So can I simply say you're exporting taxes from India? Participate and do let me know. Can I simply say you're exporting taxes from India in this example? Everybody is okay? Anybody has a doubt? Anybody has a doubt? Everybody is okay. You are exporting taxes. But the international convention, international practice is that we should not be exporting we should not be exporting taxes. We should be zero rating. Remember the term. We should be zero rating our exports. We should be zero rating our exports. Simply means whenever you export a product in the market price that you're deciding, no taxes should be included. 0 rupee tax should be included when you decide the market price of your export. That is called as a zero rating of exports. Now, simple question to all of you, right? Ignore RODTP. Don't bring in RODTP here. Is it okay if I say before RODTP, before remission of duties and taxes on export products, because ITC was not given to you, can I simply say our exports were not zero rated? Let me know. Before RODTP was implemented, because under RODTP we want to promote the idea of a zero rating of exports. So I'm saying before RODTP was implemented and you did not get the ITC on petrol taxes that you have paid, can I now conclude our exports were not zero rated? Our exports were not zero rated. And what is the problem with exports not being zero rated? Please tell me. If these are not zero rated, market price is higher because of certain taxes. And if the market price is higher, don't you think competitiveness of your products will be lower in the international market? All of you able to connect the dots? Right? All of you able to connect the dots? you did not get the 10 rupee tax that you paid on petrol as input tax credit. So what did you do? You added it to market price. And as a result of that, market price increased. That reduced the competitiveness of your exports. So look at the second point here. There's a term called as embedded tax. Embedded tax means the taxes which are there in the system, which are paid by the manufacturers, but are not given back to the manufacturers. Is it okay? I'll repeat it. What do you mean by embedded taxes? The taxes which are paid by the manufacturers, either on petrol, on electricity, at the state level, at the central level, or even at the local level. Even at the local level. So local, state government, central government. So at any level, you have paid certain taxes. You did not get these taxes. You did not get the credit of these taxes. You did not get ITC for this. These, what you will do is you will add these taxes in the market price. These are called as embedded taxes, right? But the best part of RODTP, is that they will identify these embedded taxes and they will give it back to you. How they will give it, I'll let you know. Just give me some time. They have identified these embedded taxes at the state, at the central, at the local level, and they will return it back to you. Now imagine you have paid 10 rupee taxes on the petrol, you will get the 10 rupee back. Very simple. You purchased petrol, you paid 10 rupee tax, and you will get the 10 rupee back. Now, is it okay if I say, because I got the 10 rupee back, I will not include 10 rupee in my market price? Automatically, the market price will come down and my export competitiveness will increase. Please do let me know. All of you okay with this? Right? I've paid 10 rupee on petrol in the form of taxes. Government will give the 10 rupee back to me. And because I'll get the 10 rupee back, I will not include the 10 rupee in deciding market prices. Market price would be lower. This will promote export competitiveness. Anybody has a problem with this? This scheme is called as remission of duties. Now look at the name. Remission of duties and taxes on export products. Remission of duties and taxes on export products. All of you okay? All of you okay with this? Now, next point. Sir, how this 10 rupee will be given back? How will I get this 10 rupee back? Will the government give it in the form of cash to me? No. Government says, no, I will not give it in the form of cash. What government says is, I will issue a certificate. Right? Your friend is back. Right? Government, imagine you are the exporter. According to RODTP, under RODTP scheme, you are supposed to get the 10 rupee tax. You're supposed to get that 10 rupee tax back. So government will give you a certificate like this. Government will issue a certificate to you. The value of the certificate is a 10 rupee. The value of this certificate is a 10 rupee, and these are called as scrips. Duty credit scrips. I think I've written it somewhere here. The duty credit scrips. All of you able to understand this? Anybody has a problem? Right? You are supposed to get the 10 rupee back. That is the tax you have paid on petrol. How does government give it to you? Not in cash. Government doesn't give you cash. Government will simply give you a certificate. Value of the certificate is 10 rupee. This certificate is called as a duty credit scrip. Now, what is the use of the certificate? Sir, how can I use this certificate? What is the point in that? Government says, tomorrow you might import something. You will import something, and when you import, you will have to pay duties to the government. You'll have to pay customs duties to the government. Government says, use this certificate. If the customs duty is worth 10 rupee, use this certificate to pay duties to me. Very simple logic. Use this certificate to pay duties to me. That is the use of duty credit scrip. And please understand, earlier also we had a concept of duty credit scrip. Earlier also, that is under MEIS as well as SEIS. Under MEIS as well as SEIS, we had the concept of duty credit scrip. But the only difference now is here in the RODTP, the duty credit scripts are digitally issued. Digitally issued. Digitally means they will issue a digital version, digital copy of a duty credit script to you. Earlier they used to issue a physical copy of a duty credit script. That's a very, very important difference. But more importantly, now you think of it. Please think of it very carefully. Can you call, again, think and answer. Can you call RODTP as an export linked subsidy? Can you call RODTP, remission of duties and taxes on export products? Can you call this as a export linked subsidy? Government of India says no, this is not an export linked subsidy. The subsidies that are there earlier under MEIS and SEIS were given based on the value of the product. That is, let's say hypothetically, if you're having a confusion, listen to me very carefully. If the value of the bottle was, let's say 100 rupee, government said 5% I will give in the form of subsidy. But this 5% will be calculated on the value of a product, on the value of the product. So it was export linked subsidy. But under RODTP, government says, no, I'm not calculating based on the value. I'm not giving subsidy to them. What I'm doing is, I am providing zero rating of exports. The international practice is we should not have any taxes on our exported products. We should have zero rating of our exports. But in India, there are embedded taxes. So I am simply remitting them back. They have paid these taxes. I am remitting back. All of are able to understand this argument of Government of India. In fact, Government of India now has stated, I want to hold consultations with USA officials. I want to hold consultations with the European Union officials. I want to tell them how MEIS is different, how RODTP is different. Under MEIS, subsidies were given. Simply subsidies were given. Under RODTP, these exporters have paid certain taxes and they have not got those taxes back. I'm simply giving those taxes back to them. Right? So, argument of Government of India is very simple. RODTP is not an export linked subsidy. It is simply a scheme where embedded taxes are being remitted back. The taxes have been paid. These are being given back to the exporters. Right? So, please have a look at it. Remission of duties on taxes on export products. The embedded taxes will be refunded under the scheme, covers the taxes at the central, state as well as local taxes. The remission is in the form of transferable duty credit script. I said, right, what is the meaning of transferable duty credit script? I said, imagine you have exported, you will get a duty credit script of 10 rupee. Of course, digital. Although I'm showing a cardboard here, digital version. Now, I will tell you, I'm the government, I'll tell you, this certificate is worth 10 rupee. You will import something, you will have to pay customs duties, pay using this certificate. If you have to pay 10 rupee customs duty, pay using this certificate. Now you will ask me, sir, I'm not importing anything. I'm not importing anything, right? One situation can be, I'm not importing anything. And second, please remember this, the duty credit scripts generally have an expiry date of 24 months. Duty credit scripts generally have an expiry date of 24 months. That is, we'll have to use within 24 months. After that, these are useless. So what will you do? If you do not have any use of this duty credit script, it's a loss for you. So government says, don't worry. You don't want to use the duty credit script, you can transfer it. You can sell it to somebody else in the market. Hence, these are called as transferable duty credit scripts. The credits can be used to pay basic customs duty on imported goods and transferred to other importers. And final point, in order to implement RODTP and decide how much is the embedded tax, Government of India set up one committee. Name of the committee is a GK Pillai committee. Name of the committee is GK Pillai committee. Based on the recommendations, RODTP has been implemented. Okay. So this is basically the scheme of RODTP. Now, please do let me know. Is it okay if I say, if you're moving from MEIS to RODTP, please do let me know. Look at point number 1. If you're moving from MEIS to RODTEP, can I call this as incentives system to remission system? Incentivization to remission system. Correct? Yes, Government of India is doing it now. Second, Government of India is implementing lot of measures to promote ease of doing business. Of course, yes. Right? For example, labor laws are being amended now. And labor laws are being amended. Various state governments have amended their labor laws. Right? The export performance is being evaluated by all the states. We are attracting FDI by making investments much more easier to be done in India. We have implemented various policies where it is easier to get licenses from government agencies. So various reforms are being implemented, which can be called as ease of doing business, which will not only promote production in India, but also exports from India. Various export promotion initiatives have been implemented. Export promotion initiatives. And for example, there is a scheme of Government of India. Let me know how many of you heard of this. One district to one product. Have you heard of this scheme? One district, one product. ODOP. One district to one product. Very, very famous now. One district to one product. Of course, today we do not have an individual scheme of one district, one product. What government has done is, there was one more scheme. They have taken this ODOP, one district, one product. They have brought it under one more scheme. The other scheme is developing districts as export hubs. Developing districts as export hubs, DDEP, developing districts as export hubs. Right, so one district to one product, promotion of exports, PLI. Let me know, production linked incentives. We are promoting exports there also. Right, so there are many schemes which have been implemented, which will promote exports from India to rest of the world. We want to boost manufacturing in India. Anybody has a doubt regarding this point? Point number 4. We want to boost manufacturing in India. Anybody has a doubt? Anybody says, sir, no, Government of India is not boosting manufacturing. Of course, yes. Best example, Make in India. Best example is Make in India, PLI, right? All of these will boost manufacturing in India. Point number 5, facilitate e-commerce exports, electronic commerce, promote exports of electronic commerce from India to rest of the world. Facilitate exports from the districts as well. And finally, streamline the SCOMET policy. Streamline the SCOMET policy. Now, what is this SCOMET policy? Please understand. In the international market, there are certain products which can be used for dual purposes. Is that okay? In the international market, there are certain products which can be used for dual purposes. Dual purposes means can be used, right? Can be used for the civilian purposes, can be used for, right, let's say defense purposes as well. So there is a policy which is very famously called as a SCOMET policy. SCOMET basically stands for, please remember this extension, Special Chemicals, Organisms, Material, Equipment and Technology. SCOMET is this, equipment and technology. So there is an agreement, there is a policy called as a SCOMET policy, and SCOMET policy regulates these trade of the products which can be used for dual purposes. And those who are asking, sir, any example of a product which can be used for dual purposes, can I give you one example? Drones. Please do let me know. Drones. Can I say drones can be used for civilian purposes? Drones can be used for defense purposes as well. Anybody has a doubt? And there are multiple products like this. There are multiple products. Satellites can be used for civilian purposes, can be used for defense purposes. Right? Vehicles, multiple vehicles, which can be used for civilian purposes as well as defense purposes. Technologies, which can be used for civilian purposes as well as defense purposes. So there are various, right, let's say chemicals, organisms, materials, technologies, etc., which can be used for dual purposes. Now, this SCOMET policy will try to regulate the trade of these products. So, Government of India says under FTP, we will also consider the implications or the provisions of the SCOMET policy, and we will implement SCOMET policy. Right, so these are certain important provisions under the Foreign Trade Policy 2023. Can we go forward now? Anybody has got any kind of doubt regarding what we have discussed so far? And because we have discussed the concept of a foreign trade policy, and before that we have discussed balance of payment. If nobody has any kind of doubt, I'll go to the next very important World Trade Organization. Very important World Trade Organization. Okay, done. Let me go forward. What is the need for SCOMET policy, my dear? Again, understand this, right? I'll take a very simple current affairs example. The virus strain. Think of it, virus strain, right? Can I say virus strain can be used in defense as well as that is national security, as well as the medical field also. The drones can be used in a defense sector. Drones can be used in a medicinal field. Drones can be used in agriculture sector also. So SCOMET policy will regulate, it will regulate what kind of goods are used for these kind of dual purposes. SCOMET policy will regulate the trade of all of this. And every member country of WTO has to keep in mind, whenever they are going to promote the trade, they have to keep in mind whether this is going to be this product is going to be used for the defense or civilian purposes. Right? That policy has to be, or any policy has to consider all of these implications. So Government of India is now saying we'll streamline SCOMET policy. Whenever we are going to conduct trade, we will be mindful of provisions of SCOMET policy. Okay, done. Let me go forward. Let me go forward. World Trade Organization, WTO, very important. But before I start, very important notice for you people. Do not read everything about WTO. Many of you will start reading everything about WTO. Absolutely not needed for UPSC. It is not at all needed for UPSC, because WTO is not a very small concept. It's a very, very huge concept, gigantic concept. Right? If you start reading from point A to point Z, if that is your target for WTO, please don't. Restrict your reading to what is required for UPSC. Basics of WTO. Are you able to understand what is happening in the current affairs regarding WTO? More than sufficient. Now let's start. World Trade Organization, right? World Trade Organization started, I'll come back to this, don't worry, started functioning from 1995. WTO was established in 1995 and it started working from 1995. But now many of you will ask me, sir, then before 1995, did we have anything else? Instead of WTO, did we have anything else? Yes, please understand. In 1940s, there was a conference very famously referred to as Bretton Woods Conference. In 1940s, during the Second World War, there was a very important conference that was conducted, famously referred to as Bretton Woods Conference. And in the Bretton Woods Conference, and before you start asking me, sir, why this is called as a Bretton Woods Conference, Bretton Woods is name of a city in USA. It is name of a place. So in this place, a conference was conducted, very famously referred to as Bretton Woods Conference. And in this conference, the member countries or various countries came together. India was one of them. And we decided, let's have three very important organizations. Let's set up three very important organizations. First one, to promote and regulate global trade. To promote and regulate global trade. And the name that was suggested was International Trade Organization. International Trade Organization. ITO. International Trade Organization. Right? ITO. Second one was to basically promote reconstruction and development of infrastructure. Many countries had suffered because of the Second World War. We should have one institution which will provide lending, which will provide loans, which will promote development of many countries. That institution or that authority which was proposed was World Bank. World Bank, even today, it plays a very important role in development of many countries. Third, We also said the trade has been disrupted, right? We need to promote development, and we also need one more authority to take care of any BOP issues. We need one more authority to keep a regulatory check over exchange rate manipulation in the international market. And the authority that was proposed was IMF, International Monetary Fund. Now, please look at the next point. The members were able to come to a consensus regarding second and third authority. They were able to come to consensus regarding the second and third authority. Hence, we were able to establish, and even today, these two authorities are working. These multilateral international organizations are working even today. Right? All of you will agree with me? Anybody who is saying in the classroom, who says in the classroom, no, sir, IMF is closed? Please do let me know. And also tell me when did it close? Because they did not tell me. What about World Bank? Is it operative even today? Is it working even today? Of course, yes. So the second and third, we were able to come to a consensus and we established these two authorities. But the first one, International Trade Organization, there was absolutely no consensus. The member countries wanted something else. Right? One group wanted something else, others disagreed. There was a lot of dispute, lot of friction. They were not able to come to a consensus. Hence, we did not establish ITO. ITO was not established. Okay, but as a temporary arrangement, as a stopgap arrangement, we simply signed one agreement, which is very, very famously referred to as GATT. GATT basically is right agreement, general agreement on trade and tariff. General agreement on trade and tariffs. GATT arrangement or GATT agreement. So all of you are able to understand the history now. History again related to WTO. So we were not able to establish ITO, but we were able to establish a second and third. And ITO was not established because consensus was not attained. And as a temporary arrangement, we set up or we signed an agreement by the name of General Agreement on Trade and Tariff. And I'll go to the next point now. Please do let me know. And that is the precise reason why they will call World Bank and IMF as Bretton Woods twins. This is the precise reason why these two, that is World Bank and IMF, are called as Bretton Woods twins. All of you are able to understand why these are called as a Bretton Woods twins? It could have been a triplet, but because we were not able to establish ITO, we were able to establish only two authorities. Hence, these two are referred to as Bretton Woods twins. Okay. Next, what happened? We implemented GATT. GATT was basically a temporary arrangement. Point number one. It was a temporary arrangement. It was not an organization. It was simply an agreement. Over a period of time, we realized that this temporary arrangement is not sufficient. Again, we started negotiating. We started holding deliberations. And we conducted deliberations, and finally from 1995, starting 1995, we established an authority. Understand, many of you start asking me, sir, what is difference between GATT and World Trade Organization? One is an agreement. Second one is an organization. It is a multilateral authority. So starting 1995, we established a World Trade Organization. And this GATT became a part of World Trade Organization itself. So GATT did not have any institutional structure. WTO has a structure. I'll show you the structure in some time. GATT was focused only on goods. WTO focuses on goods, services, intellectual property rights, investments, disputes, etc. So the scope of WTO, it is an organization. The scope of WTO, the work of WTO is much, much higher beyond GATT. Okay. Coverage was limited. How many countries were covered under this GATT? 120 countries. Whereas in WTO, more than 150 member countries are there. More than 150 member countries. Dispute settlement was very slow. But under WTO dispute settlement, there is a structure for it. Although that also has become very slow now. Why, you will understand in some time. Dispute settlement under GATT was a problem, but under WTO it is a very simplified structure. All right, but again I'll tell you what has happened with even WTO. Okay, so this is why we have shifted from the concept of a GATT to World Trade Organization. Now I used the term tariff earlier, right? Earlier I used the term tariff. What do you mean by tariff? What do you will understand by tariff? Please understand this. Whenever you come across tariffs, whenever you come across the term tariff, tariff simply is a type of trade barrier. Trade barriers are nothing but restrictions that will hinder, that will disturb the trade between two countries or more than two countries. For example, please do let me know. Very recently, in the last couple of years, many countries around the world have increased the taxes on the imports that they are receiving. The imports that are coming into their country, they've increased the taxes on it. That is, the import duties have been increased. Very simple question to all of you. If these tariffs are increased, can I simply say this will disturb the trade between the countries? This will become a hurdle or a barrier to conduct a trade between countries? Of course, yes. So whenever you come across the term tariffs, and please understand this point also, is India an exception to this? Has India increased the tariffs in the last couple of years? WTO report says yes. Government of India in the last couple of years has in fact increased tariffs, has identified more and more tariffs on the products, imposed tariffs on it. Tariffs are nothing but taxes. Tariffs are nothing but taxes, right? Many of you ask me, what is tariff? Tariffs are nothing but taxes, right? And now many of you start asking me, in that case, is a sales tax a tariff? Is right, let's say property tax a tariff? Is income tax a tariff? No. Whenever you're talking about international trade, whenever taxes are imposed on imports as well as exports, these are called as tariffs. Is it okay? Whenever taxes are imposed on imports as well as exports, these are called as tariffs. Right? Now, please do let me know, can we use a tariff to reduce export? Current affairs. Let me see. Can we use a tariff to reduce exports? Imports, yes, that's a very straightforward answer. On import, if I increase the tariff, automatically it will come down. Imports will come down. But my question is on the other side. Can we impose a tariff on export? Answer is yes. Is Government of India doing it? Answer is again yes. Many of the agriculture commodities in recent times, Government of India has imposed export taxes, export tariffs, and the reason is domestic security, domestic inflation. Government is concerned, if I export more, supply to the domestic market will come down, and if supply will come down, inflation will increase. So what I will do, I will increase the taxes, I'll impose, and if I want, I'll increase the taxes on exports, so that, right, exports will come down, supply to the domestic market will increase, I'll be able to control inflation. Done, right? So tariffs are nothing but taxes, right? Customs duty, import duty, etc. All these are tariffs only. Now, let me go to the second type, non-tariff barrier. Non-tariff restrictions. How do I define what is a non-tariff restriction? Very simple. Any barrier which is not a tax. I'll repeat the statement. Any barrier which is not a tax is called as a non-tariff barrier. All of you okay with my statement? Please do let me know. Any barrier which is not a tax will be referred to as a non-tax barrier. For example, quotas. Let's start. For example, quotas. Now, what is this quota policy? And in fact, Government of India is using it now. What is a quota? Quota are nothing but volume restrictions. Quotas are nothing but volume restrictions. That is, volume restrictions will be imposed on the imports or exports. Let me give a very simple example. Imagine government of India will say, you are importing this bottle, but in this year, you are not allowed to import more than 100 bottles. Please do let me know. You are importing this bottle. In this year, you are not allowed to import more than 100 bottles. Can I simply say this is a volume restriction? Anybody has a problem? Can I simply say this is a volume restriction? And what is the impact of volume restriction? Whenever there are volume restrictions, automatically imports or exports will be affected. Anybody has a problem? Please do let me know. Anybody has a problem? Quotas are nothing but volume restrictions. Volume restrictions, automatically these will restrict the imports or exports. And is Government of India doing it? Yes. In many of the agriculture commodities, Government of India is imposing even quota restrictions. We can be used. We can use it for controlling imports also, controlling exports also. And ultimately, please understand, whether you're controlling import or export, ultimately international trade will be affected. Barrier means any restriction that will disrupt the trade, that will disturb the trade, and quota will disturb the trade, tariffs will disturb the trade. But let me ask you a very simple question. Between quota, that is non-tariff barrier, between non-tariff barrier as well as a tariff barrier, which one do you think is more effective in disturbing the trade? Think of it. Between tariff as well as non-tariff barrier, please think logically, by the way. Between tariff barrier as well as a non-tariff barrier, one example I've discussed, I'll discuss others also. Which one do you think is more restrictive in nature? Which one will disturb the global trade more? It is non-tariff barrier. Many of you are saying tariff barrier. No, it is non-tariff barrier. Why? Let me explain it. Think logically always. Imagine Government of India. I'll take a very simple example. Imagine Government of India says the tariffs on this, the taxes on this will be increased from 10% to 15%. The tariff on this, right, will be increased from 10% to 15%. Now tell me, market price will increase and the higher market price will be paid by the customer. Even then, can the imports continuously flow into India? Think of it and do let me know logically. From 10%, the tariff will increase to 15%. Means what? Market price will increase. So if I am an importer, I'll keep on importing. Higher taxes, I'll increase the market price collected from customer. That's it. On the other side, quota. Think of it. Quota. If quota is imposed, 100 bottles only. Government will simply say, import, but only 100 bottles. Will I be allowed to import more than 100 now? Will I be able to import more than 100? Absolutely no. But earlier, if a tariff barrier is imposed, I will import 500. I'll import 600. I'll import 1000 at higher prices. I'll sell it to customers. So, non-tariff barriers are more restrictive in nature. All of you okay with this? Non-tariff barriers are more restrictive in nature. Let me go to the second one. Exchange rate restriction. Exchange rate restriction. I'll give you a current affairs example. Pakistan. Very recently, Pakistan, Central Banker of Pakistan, imposed a restriction over the exchange rate. What do you mean by restriction over the exchange rate? What if I say, imagine, we are not doing it in India, but imagine, you are an importer, you want to import this bottle, but now in terms of payment, you will have to pay rupees, purchase a dollar and give it to the exporter. Correct? You will import the bottle, let's say $1, but you don't have dollar. You will have to convert your rupees to dollar, take the dollar, give it to the exporter. What if RBI says conversion from rupee to dollar will not be allowed? Think of it. Think of this logic. Okay, conversion from rupee to dollar will not be allowed. They can restrict also. They can restrict up to certain level, or they can simply say, we will not allow you to convert rupee to dollar. Now, please tell me, if you're not able to convert your rupee to dollar, but the exporter is asking for payment in dollar, will you be able to import the product? Will you be able to import a product? Absolutely no. Has it happened recently in India? No, but in Pakistan, this was done. Please check the newspapers. In Pakistan, this was actually done. And why? Many of you ask me, sir, why? Why did Pakistan do it? Pakistan, in that country, they were running out of forex reserves. They were simply running out of forex reserves. So when you're running out of forex reserves, should you be allowed to convert your rupee to dollar and import a car into a country? Does it make sense? Should you be allowed to convert your rupees to dollars and import luxury items into that country? No, it should not be allowed. Why? Forex reserves are very precious. All of you okay with this? All of you okay? Anybody has a doubt in this? Anybody has a problem? Restrictions will be imposed over the conversion only. Over the conversion. Can I give you one more example in current affairs? Current affairs. Once Russia invaded Ukraine, right? Long time ago now. It feels like over a decade. Although it is not a decade, it feels like over a decade now. Once Russia invaded Ukraine, G7 group of countries, they imposed sanctions on Russia. Correct? They imposed sanctions on Russia. And when they impose sanctions on Russia, what does it mean? Any country that will conduct a trade with Russia, they will not be allowed to convert their currencies into dollars and pay to Russia. Very simple. When they impose sanctions, what does it mean? India is conducting trade with Russia. You cannot convert rupees to dollars and use the dollars to pay to Russia. You will not be allowed to do that. So now please tell me, if these kind of restrictions are imposed in terms of currency conversion, these restrictions are imposed, will it disturb global trade? Will it disturb trade between two countries? Will it disturb multilateral trade? Answer is yes. Export rate restrictions are also very dangerous, very dangerous. Okay, third one, administrative and technical regulations. Administrative and technical regulations. Now, what is this idea for administrative and technical regulations? The importing country will impose certain conditions. For example, importing country might simply say, you want to import a product, you want to bring this product into India, show me a certificate, right? I want a certification for this product. And many of you ask me, sir, why certificate might be required? What if government of India says all the cars in India must be BS6 compliant? Have you heard of BS6, BS4, BS6, etc., etc.? So I hope you understand this. What if government of India says, right, all the cars that are imported should be BS6 compliant? Now, how do you prove it's a BS6 compliant? Government will say, show me, get a certificate for the car, show it to me. And is the government of India doing this? Yes, government of India is doing this. Right? There is a policy now. This is very famous now. This is very famous. Government of India has imposed something called as quality control order. Quality control orders. Very famous now. Very often this is cited in the newspaper. Listen carefully. QCO, quality control order, QCO. For example, you're importing a toy. Please get a certificate done from an authority. Get a certificate done from an authority which will show me that none of the raw materials, none of the inputs in the toys are harmful for children. Are you able to understand this? There is a quality control order which has been issued by Government of India which says you want to import a toy, then get a certification done, right? Have a certificate which will show me that none of the raw materials that are used, none of the components of the toy are harmful for children. This concept is called as a quality control order. It is being implemented in case of toys imports now. Now you think of it and do let me know. If I ask you to get a certificate, don't you think it will increase documentation work for you? Correct? It will increase documentation work. And not just this. Now you'll have to approach a lab, get the certificate, get the quality testing done. That will also mean increased expenditure for you. So now, because of time consumption, because of the cost process, because of documentation, the disruption will take place. Imports or exports can be disrupted, right? So administrative and technical regulations. This is there very recent in the newspaper. Please be very, very careful. This was there very recent in the newspaper. Many of the importers and exporters are unhappy with QCOs which are being issued by Government of India, because they are saying it is very costly for me. It is not easy to get a certificate done, because then Government of India will say you will have to get the certification done only in these labs. And if you approach those labs, they'll say this is the cost of giving your certificate. This much will be the time that we will require. These are the documents that I will need, etc. etc. It's a very cumbersome, tiring process. Okay, technical administrative regulations. And fourth one, government procurement policy. Government will have a procurement policy. Government will ask you to procure some of the goods from the domestic market itself. I'll give you a current affairs example. All of you heard of FAME initiative? Let me know. All of you heard of FAME initiative? FAME, faster adoption and manufacturing of electric vehicles. Faster adoption and manufacturing of electric vehicles, FAME. Now, under the FAME initiative, government will provide certain subsidy in order to reduce the market price of electric vehicles. Two-wheeler, three-wheeler, four-wheeler, buses, etc. Government will provide certain subsidies to reduce the market price so that the product becomes attractive, affordable for the customers. Otherwise, electric vehicles are very, very costly. These are very, very costly. But the condition that the government imposes is, you want to get the subsidy under FAME, then 50% of your products, you will have to source it from India. Very simple. You want to get subsidies under FAME initiative? Then show me that 50% of your inputs you have sourced. Sourced means purchased from India only. I'm talking about this because this was there very recently in the newspapers. Reason being, many electric vehicle companies, they told Government of India that they are meeting conditions of government procurement. That is, they are procuring from the domestic market. But in fact, they have not met those conditions. And that is a precise reason. Remember the authority name. It is a Department of Heavy Industries or Ministry of Heavy Industries. Ministry of Heavy Industries is asking these companies which have falsely, wrongly claimed that they have sourced from the domestic market to return the subsidy that they have collected. So can I simply say this is a procurement policy? It is a government ordered procurement policy. And if government is ordering 50% you purchase from India only, please tell me, will it affect imports? Will it not disturb the trade between countries? Answer is yes. Right? So these kind of policies, these kind of non-tariff barriers, NTBs, they'll write it as a TB, tariff barrier, and NTB, non-tariff barrier. So these kind of TBs as well as NTBs can be used by the member countries to reduce the trade that is taking place in the global market. Done? Now let's take a break. We'll continue the discussion regarding WTO. After the break, we'll start from this slide. But before that, if there are any doubts, any confusions, please do let me know. I'll address it, then we can take a break. Hindu articles. Which are the important Hindu articles? Okay, point number one or article number one. There is a central page article regarding upskilling. Upskilling in India. Please read that. There's a very nice article regarding upskilling. Please read that. What is the need for upskilling rural youth in India? Very good article, very important article as well. Okay. Second article regarding Adani. In fact, it is not one article, multiple articles are there. Headlines is regarding Supreme Court of India's judgment of SEBI's investigation into allegations of Adani or allegations into Adani's company. Okay, multiple articles are there. I would recommend read all those articles. Read all those articles. In the first page, there is one. In right after some of the pages, there are around 4 to 5 articles regarding the same thing. Regarding same thing. And if you are reading these articles, please do let me know. There is a term called as short selling. Will you be able to understand that? And what is the impact of short selling on investors in India? Will you be able to understand that? Because both of the terminologies are being mentioned. They have not discussed all of them detailed in detail, but they have been mentioned. There is an allegation that Adani's companies are involved in price manipulations, price rigging of their shares. Right? I hope you will be able to understand all of this because earlier class in the financial market I've discussed how can companies price rig? How can how can the owners of the company manipulate the share prices? Why will they do that, etc.? Right? How the manipulation can be done? What is short selling? What is the problem with that, etc.? We have discussed that. Read those articles. I would recommend strongly read those articles. So central page, editorials, good, read. Apart from that, skilling initiative. I'm sorry, why should we promote skilling in rural India? Read that. Adani company articles, read it. Right. So these are, as far as I'm concerned, the important articles. Important articles purely from economics perspective. Okay. Any other question? Is GST included in export goods? My dear, you please tell me. Please tell me. Right. The imports and exports, and basically any product will come under GST. Any product which is under the GST, if it is imported or exported, will come under GST. But whenever it is import and export, it will come under IGST because we will treat it like interstate trade and commerce. But more importantly, should we impose taxes, GST, on our exports? Don't you think if I impose a GST on our exports, it will not be zero rating of our exports? Right. So I hope I understand. Uh, what is embedded taxes? I'll repeat it. Any taxes that have been paid but have not been returned to the manufacturer, have not been given back to the manufacturer. These are called as embedded taxes. Can we say WTO is a successor of GATT? GATT is a part of, it is one of the agreements which is part of WTO now. So yes, you can say in a sense, WTO is a successor, but please understand GATT is not an organization. GATT is not an organization. It was basically an agreement. WTO is a very well established organization. Okay, done. So let me take a break now. Let me take a break. We'll restart the discussion at 8:27. Take a break. We'll restart the discussion at 8:27. Okay. Okay, good morning, welcome back. Am I audible? Please do let me know so that we can start the discussion. Let's start. So, WTO, World Trade Organization, certain important points. Point number one, WTO was established, came into existence 1995. India is a founding member, right? It's been more than 2 decades now that WTO is working. The headquarters of WTO is in Geneva, that is in Switzerland. The functions of WTO are one, any kind of trade agreements that are signed, WTO will try to implement these trade agreements. For example, agreement on subsidies and countervailing measures, agreement on agriculture. We'll discuss that tomorrow. Don't worry, there is agreement on agriculture. There is one more, right? The TRIPS agreement, right? GATT agreement, GATS agreement. All these trade agreements are being implemented through WTO. It will act as a forum for negotiations, trade negotiations of member countries. It will also settle trade disputes. How? You will understand in some time. Have patience. It will also review the trade policies of the member countries and publish report. Right? Every now and then, member countries' trade policies are reviewed, studied, reviewed, and the publication, that is, reports are published. These are some of the very important functions of World Trade Organization. Now, let's go to the next. What is the structure? What is the structure of WTO? Right. So have a look at this. The structure of WTO. And basically, at the top, we have a ministerial conference. Under WTO, we have a ministerial conference. And please remember this: a ministerial conference is the highest decision-making body. Ministerial conference is the highest decision-making body. Now, what is this ministerial conference? Every now and then, okay, every now and then, the ministerial conference, and when I say every now and then, generally the convention, underline the term, the convention is that it should meet once in 2 years. It is a convention, not a compulsion. Convention, once every 2 years, the member countries will meet. And when I say member countries, representatives of the member countries, for example, the Trade and Commerce Minister of India, the Secretary of State for Commerce of USA, right? These are the trade ministers. So the member countries' trade ministers will come together, deliberate, discuss, and if they agree, if all the member countries agree, they will come out with agreements. So ministerial conference generally meets once in 2 years. They will discuss and they will deliberate, and if possible, they will come out with agreement. So highest decision making body under WTO is a ministerial conference. But now, for day-to-day operations, for day-to-day discussions, for day-to-day taking care of WTO activities, every day ministers cannot join. Ministers cannot be involved in all these the discussions on day-to-day basis. So what we have is, below ministerial conference, we have one more authority called as a general council. Below ministerial conference, that is, ministerial conference meets once every 2 years. It's a highest decision making body. But for the day-to-day governmental activities, for day-to-day administrative activities, we have one more authority under WTO, General Council. And who are members of General Council? All the member countries of WTO. All the member countries of WTO will have a representative in a General Council. So this General Council will take care of day-to-day activities, day-to-day administrative activities of World Trade Organization. Now, whenever there is a requirement, generally once in a month, right, or whenever the member countries want it, right, the General Council will act as a dispute settlement body. Right, what is a dispute, how it is settled, etc. You'll understand in some time. And this General Council will also review the trade policies of the member countries, and that is called as a trade policy review body. This is a structure of World Trade Organization. This is basically the structure of World Trade Organization. Now, next point, what are the principles? Principles associated with the WTO. Understand all the three very carefully, important, understand. First principle is most favored nation, MFN, most favored nation. Now, what is this most favored nation? a country whenever it will conduct a trade with any other member country of WTO, it cannot have a discriminatory policy. I'll repeat the statement. Listen carefully. A country, let's say India will conduct trade with many trading partners which are members of WTO. So India cannot have a discriminatory policy for some of the countries. Right? That policy is called as a most favored nation. Or else you can also simply say a trading partner should have a non-biased approach, should treat all the trading partners same way. Right? Should treat all the trading partners who are members of WTO in the same way. There should not be any discrimination. That policy or that principle is called as most favored nation. Anybody has a problem with this? Please do let me know. Anybody has a problem? Now, just to make it much more clear, let's take a very simple example. Let's say India will conduct a trade with country A, B, and C. India will conduct a trade with country A, B, and C. And if this bottle is imported into India, this bottle will come from all the three countries. India cannot have a discriminatory policy here. India cannot simply say, if the bottle will come from A, I will impose a 0% duties. If it will come from B and C, I will impose a 20% duties. Please have a look at this. Please have a look at this example that I've written on the PPT or in the slide. Do let me know if India will do this. Can I say India has a discriminatory trade policy? Think of it. Can I say, if in this example, can I say India has a discriminatory policy? That is, it is favoring one trading partner and it is not favoring other trading partners. This is not allowed. Under most favored nation, you will have to treat all your trading partners in the same way. Right? That is called as a most favored nation. But let me give you certain exceptions now. Listen carefully. Let me give you certain exceptions. What is an exception? Where MFN principle is not applicable. For example, what if India will sign a trade agreement with A? Let me know. And if you're reading newspapers, the term trade agreement should not be anything new to you. In the last couple of weeks, have you come across India negotiating trade agreement with USA? India has a trade agreement with ASEAN, right? India has a trade agreement with Australia. And if you say, sir, no, I have not come across it, my dear, it simply means you're not reading newspaper. Very simple. If you say, sir, no, I've not read it, I've never come across it, congratulations, you're not reading newspapers. Right? Which means you'll have to start reading newspapers carefully now. Right? So argument is simple. Whenever you sign a trade agreement, what is the meaning of a trade agreement? You will have a favorable approach. You will have a biased approach towards the trading partner. All of you okay with this? You will have a biased approach. You will have a favorable approach towards a trading partner. For example, let's say this country A is Australia. This country A is Australia. Now we have a trade agreement with Australia. We do not have a trade agreement with USA. We do not have a trade agreement with China. Now look at the example. We do not have trade agreement with USA. We do not have trade agreement with China, but we have trade agreement with Australia. So now is it okay? Is it okay? And this is correct. This is allowed under WTO. It is allowed. It's an exception. Is it okay if I say, if this bottle will come from Australia to India, government of India will have every right to say, I will impose a 0% duty, 0% tariff. But if this bottle will come from China and USA, with both of whom we do not have a trade agreement, can I say I will impose a 20% tariff on the bottle? All of you okay? Anybody has a problem with this? So exception is allowed. For most favored nation principle, exception is allowed. What is an exception? Best example is if India has a trade agreement with any country, India can target these countries' products and selectively only for these countries' products they can reduce or eliminate tariffs. Can I go forward? I'll add one more current affairs concept here related to the most favored nation only. There was a concept which is again and again appearing in the newspapers: generalized system of preferences. Generalized system of preferences. Very, very famous now. I will tell you the context also. The Prime Minister of India visited USA last year. Correct? Anybody in the classroom who says no, sir, Prime Minister of India did not visit USA last year? So, Prime Minister of India visited USA last year, and very recently, the trade pact agreements, negotiations are happening between India and USA. One of the points that India is insisting, one of the demand from Indian side is USA should restore the generalized system of preferences status for India's exports. Now, question is, what is the meaning of generalized system of preferences? In short, GSP. Understand this carefully. GSP simply means a developed country will have a tariff policy. A developed country will have a tariff policy where they will provide certain reduction in the tariff or elimination of tariff whenever the product will come to the developed country from developing countries. All of you okay with this? I'll repeat the statement. Listen carefully. What is generalized system of preferences? A developed country will identify developing countries, and if some of the products that they have identified, if these products will come from developing countries, they will have a reduced tariff. They can have a lowering of tariff, or they can altogether eliminate tariff. I'll give you one example. Look at it. Imagine this is USA and this is India. Okay, this is USA and this is India, and let's say there is one more country, trading partner of USA, Germany. This bottle will go from Germany to USA, exported from Germany to USA, from India to USA, and USA, let's say USA has identified Indian products and has given a GSP status to India. In such case, this bottle generally would attract a tariff of 20%, but government of India might simply say, because India has a GSP status, I will impose a 0% tariff on this bottle. I will impose a 0% tariff on this bottle. So all of you okay with the concept of generalized system of preferences? It is provided, it's a status, it's a recognition that is provided by a developed country to a developing country, under which certain products which will come from developing countries will attract lower tariff, lower or no tariff at all. Why is it being done? What is the objective behind it? The objective is to promote trade between a developed and developing country. We want to promote a trade, we want to facilitate more and more trade from a developing country. Right? This is a concept of generalized system of preferences. India earlier had a GSP status from USA and many other countries. There are more than 20 countries around the world who have given GSP status to India. Earlier, when Mr. Donald Trump was the president of USA, government of USA decided we should not be giving GSP status to India. And those who will start asking me, why, sir, why they decided that? There was a trade dispute. There were certain trade related frictions between India as well as USA, and the government of USA withdrew GSP status to India. And now that is the precise reason government of India is negotiating a trade agreement, negotiating with USA officials. Government of India wants restoration of GSP status by USA government to India's exports. All of you okay with this argument? Now please tell me, is it not an exception to the most favored nation principle? Let me know. free trade agreements, right? The GSP status, etc. Are these not an exception to most favored nation principle? Of course, yes. These are exceptions now. And it is applicable for a lot of these principles, lot of these agreements also, a lot of exceptions are always there. Okay, let's start. Let's go ahead now. Now, I'll add one more point. USA and China are part of most favored nation status which has been given by India. Whereas there is one more country, our neighboring country, Pakistan. Government of India says we will not give status of most favored nation to Pakistan. I'll repeat my statement. Government of India says we will not give MFN status to Pakistan. We will withdraw it. Now, please tell me, if this bottle will come from Pakistan to India, is it okay if I say, because there is no MFN status given to Pakistan by India, can we target this bottle and impose a 50% tariff? All of you okay with this? I'll repeat it again. Government of India says this MFN status I will not give to Pakistan. Right? It's not a most favored nation country for me. I will withdraw the status. What is the meaning of it? Any product that will come from Pakistan, let's say this bottle, if it will come from China, USA and other trading partners who have MFN status, tariff will be 20%. But because Pakistan does not have MFN status with India now, Government of India can increase the tariff, can have any rate of tariff on this product which will come from Pakistan. Is the logic okay? Can I go forward? So first principle of WTO, most favored nation. Second principle, national treatment. What is national treatment? Once the good has been imported, a similar good is manufactured in India, right? This bottle is imported and a similar bottle is manufactured in India as well. There shall be no discrimination. Government of India cannot discriminate between an imported bottle as well as domestically manufactured bottle. Is it okay? Can I go forward? What is national treatment? A good that has been imported and a similar good which has been manufactured in the domestic market, governments cannot discriminate between these two. Discriminate simply means government cannot have a policy favoring one product and not favoring another product. That kind of policy cannot be done. Okay, so national treatment. Third one is free trade. What does the free trade basically say? Right? What does the free trade basically say? Free trade says that whatever barriers are there, whatever barriers have been implemented, reduce and eliminate those barriers, thereby automatically promoting international trade. Reduce and eliminate those barriers, thereby promoting these the trade between countries, trade that is global trade. So all of you okay with the most favored nation, national treatment as well as free trade? Okay, so these are the three very important principles of WTO. Anybody has a doubt? Why any goods come from Pakistan into India as Pakistan is our enemy country? My dear, it simply means you do not know the trade relations between India and Pakistan. How many of you know that earlier we had trade relations with Pakistan? Now, no. I do agree. Now, no. But earlier we had trade relations with Pakistan. We used to import, we used to export, we used to do that. Right? For example, onion. We used to import from Pakistan earlier. Now we don't do that because it's becoming more of a national security issue. But any country, again, when I say India and Pakistan, do not take it literally between India and Pakistan. Any trading partner to whom we will not give MFN, we will withdraw the MFN status because by default we generally give it. But any trading partner, any country, we say we will withdraw MFN status. It simply means we can target the products. We can have a higher tariff targeting the imports from that. Okay. What is WTO? WTO refers to an international organization, World Trade Organization. World Trade Organization. My dear, what are you listening to? I don't know. What are you listening to? For last half an hour, again and again, I'm using the term WTO. Okay. I can't understand GSP or MFN. MFN only India. Are Baba, I'm taking India as an example. USA will also have a MFN principle. Every trading partner has to follow MFN principle. I'm talking about India. I'm taking example of India. But when I explained, I said any country which will trade with any other member country of WTO has to treat all of them equally. USA, it will conduct trade with many trading partners who are members of WTO. US has to treat every trading partner in the same way. That is MFN. Okay. You are not listening carefully. If you do not listen carefully, everything will be confusing. Okay, what are the agreements under WTO? Listen carefully. Agreements under WTO, three very important agreements: GATS, TRIPS, and TRIMS. GATS, TRIPS, and TRIMS. What is GATS? General Agreement on Trade in Services. What is a TRIPS? Trade related aspects of intellectual property rights. TRIMS, trade related investment measures. Let me start with the first one, GATS. The GATS agreement will cover trade in services in international market. GATS, GATS will cover trade in services in the international market. And this agreement will classify the trade in services into four types. I'll repeat. This agreement will classify the trade in services into four types. These are called as mode 1, 2, 3, and 4. Now listen very carefully. If you do not listen, you will say, what is mode 1 and mode 4 difference? What is the difference between mode 2 and mode 4? If you don't listen, all of it will be confusing. Listen carefully. Mode 1, 2, 3, and 4. Let's start. Imagine there are two countries, country A and country B, and this is the border. Black dotted line is a border. First mode, it is called as a cross-border services, cross-border movement of services. What will happen in a cross-border movement of services? The supplier of services will not cross the border. The consumer will also not cross the border, but the services will cross the border. Can I give you one example? Right? Let's say customer call centers. Please do let me know. Customer call centers. The service provider is there in India. Customer is there in USA. So all of you will agree the services are provided across the border. Neither of them are crossing the border. All of you are okay with the mode 1? What about banking services? What about teaching services? For example, imagine you will enroll into one of the foreign institutions. Right? Don't you think if you go for online courses, you are sitting in India, and you are studying. You are getting access to the classes, online classes. You are sitting in India, and the university is present in a foreign country. Neither the provider is crossing the border nor the consumer is crossing the border. Only services are crossing the border. That is called as cross border. That is mode 1. Let me go to mode 2. Consumption abroad. Let's say, okay, there is a foreign tourist from USA. This tourist from USA will come to India. I'll repeat, this tourist from USA will come to India, will use Ola services in India, will use restaurant services in India, will use hotel services in India, transportation services in India. So can I simply say, in mode 2, the consumer is crossing the border and then consuming services? All of you okay? In mode 2, consumption abroad, the consumer is crossing the border and consuming services. right? That is called as mode 2, consumption abroad. Mode 3, commercial presence. Mode 3, commercial presence. Let's say a foreign university will come to India. I repeat, this is happening right now. If you're reading newspapers, you'll know this. A foreign university will come to India, establish university in India, and you will enroll into the university. Or else a foreign telecom service provider will come to India, set up a company in India, you will start consuming the services of the foreign company. A foreign civil aviation company, right? A foreign civil aviation company will come to India, set up operations in India, and will start consuming the services. Now, please do let me know. Is it okay if I say in these three examples? In these three examples, can I simply say the service provider is crossing the border? Is it okay? Right? The service provider is crossing the border. In the second mode, consumer was crossing the border. In mode 3, service provider is crossing the border. So service provider will cross the border and start providing services, which is called as a commercial presence. And mode 4, right? Listen carefully. Mode 4, a person, natural person means individual. Let me take an example. A chef, or let's say a yoga instructor. A chef or a yoga instructor will cross the border, will enter into another country, and they will keep on providing services as a freelancer. Is it okay? A natural person will cross the border and they'll keep on providing services as an individual, freelancer only. Or else they will cross the border, join a company. And start providing services. This is called as presence of natural persons. So mode 1, customer, service provider, nobody will cross, right? Everybody will remain in their own countries, but services will cross the border. Mode 2, customer will cross the border and start consuming services in second country. Third mode, company will cross the border and start providing services. Fourth mode, individual. I'm a teacher. I will cross border. I'll go to Australia and I will join a company in Australia and company will provide services. Or else I'll cross the border. I'll go to Australia and right, I will not join any company. As a freelancer, right, I'll directly provide services to customers. That is mode 4. Right. So these are the 4 modes of international trade in services. Whatever I've discussed so far, it is written in a table. Please read it. Whatever I've discussed so far, it is there in the same thing is there in the table. Please read it. Okay. So GATS, General Agreement in Trade in Services. General Agreement on Trade in Services covers the international trade in services. Now, is it okay if I say whenever you are conducting trade in services, the governments such as Indian government, Australian government, etc., they will have to abide by MFN principle. They will have to abide by national treatment, etc. So all these are the obligations. All these are the obligations of the member countries under the GATS. Right? You cannot treat the services when they are entering into a country. You cannot treat services differently. Right? And when these are the services which are coming from trading partners, or let's say member countries of WTO, you will have to treat all the services in the same way. So this is one GATS agreement. Let me go to the second one, TRIPS agreement. TRIPS agreement. TRIPS covers intellectual property rights. I'll repeat the statement. TRIPS covers intellectual property rights. Now, what is the intellectual property right? Anything that is a creation of a mind. I'll repeat the statement. Anything that is a creation of a mind is called as intellectual property right. For example, have you heard of copyright? Let me know. Have you heard of the term copyright? Whenever you're watching a video, whenever you're watching a music, right? Let's say video, you're listening to music, right? Or you're watching a movie, etc. Copyright, copyrights. Anybody who has created it will have the ownership of the product. Patents, and if you're reading newspapers, please do let me know. Very recently, was there a discussion regarding copyrights between New York Times and OpenAI? Let me see how many of you read newspapers. Is there very recently a discussion between two companies, OpenAI and New York Times, NYT, New York Times. New York Times is a publication house. In USA, it's a publication house. Right? Those who are wondering, sir, what are you talking? I'm not reading, etc. Please check. Please check for the last 1 week. New York Times has filed a case against OpenAI. It has filed a case against OpenAI. And the gist of the case is very simple. OpenAI is getting access to certain copyright material of New York Times and they are using it. So New York Times says it is a violation of copyright law. It is a violation of a copyright law. OpenAI is violating the copyright law. Okay, read the newspapers. That's a reason. So TRIPS, trade-related aspects of intellectual property rights. It will cover IPRs, intellectual property rights, which means every member country of WTO should have a law to protect intellectual property rights. Should have a law to protect intellectual property rights. Right? For example, imagine Samsung company. They would have invested a lot of money, conducted a lot of research and development. They have a patent. They have basically have a right over a technology. Can you set up a company, start using the same technology and manufacture mobile phones? Should it be allowed? Right? A pharmaceutical company, they have invested a lot of money in research and development. They have created, let's say, a drug, a medicine. Can you use their technology and manufacture drugs, right? Sell it in India at throwaway prices? Government will not allow it. Certain exceptions are there. Government will never allow it. Why? Under WTO, there is an agreement called as a TRIPS agreement. Under TRIPS agreement, every member country should have a law. Using the law, they will protect the intellectual property rights of their own companies, that is, the domestic companies, as well as international companies. That is, they will have to ensure there is a national treatment. They will have to ensure there is application of MFN principle, etc., etc. So all of you okay? What is the concept of a TRIPS agreement? It will apply to all the WTO members. Every member country should have a law to protect intellectual property rights of all the companies, all the let's say member countries companies. Next one is TRIMS, trade related investment measures. Trade related investment measures. What does this trade related investment measures actually say? Every member country should formulate laws, should have certain laws, policies which will protect investments from different countries, which will not hinder the trade of goods from different countries. So policies, laws should be made in member countries to protect investments, to promote trade between the member countries, etc. Refers to rules or laws that the domestic government will apply on foreign investors as a part of industrial policy. So government should not formulate a policy which will affect foreign investors, which will protect the interests of domestic investors but affect foreign investors. That kind of policy should not be made. That kind of policy is hurting international investors. Okay. Restrictions on foreign capital should not be imposed. Foreign investors should have the same rights as domestic investors. No restrictions in investments, trading of goods, etc. So that is basically the scope of TRIMS agreement. So India, please understand, India is a signatory for all of these agreements. India is a signatory for all of these agreements. Let me give you a current affairs example. Let me give a current affairs example so that you understand how the government generally implements it. Couple of years ago, Government of India was concerned that lot of investment is coming into India from China. I'll repeat the situation, understand this. Couple of years ago, that is specifically during pandemic, okay? Couple of years ago, India was concerned that lot of investments are coming from China. But you think of it, India being a signatory for all of these agreements, can you implement a policy where you will target only the Chinese investments? Is it a fair trade policy? Think of it. Can you have a policy where you will target only Chinese investments and you will try to reduce these investments? No, you can't do that. If you do that, then it's not a fair trade policy. You're violating the provisions of agreements. So what did Government of India do? What did Government of India do? Government said any investment that will come into India from our neighboring countries. Look at it. I'll repeat the statement. Any investment that will come into India from our neighboring countries, not states, neighboring countries, they will have to invest only after getting the approval from government. Are you able to understand the importance of this policy? Let me know, I'll repeat it. Any investment that will come into India from neighboring countries, they are allowed to invest only after taking approval from the government. So now tell me, right, can anybody say we are targeting only one country's investment? Can they say we are targeting only Chinese investments? No, right? We are not having a policy like that. We are not making policy like that. We are simply saying any investment, if it comes from Bangladesh, get the approval of the government. If it comes from, right, let's say Nepal, get the approval from the government. If it comes from China, get the approval from the government. Right? So these kind of policies are made, because if you do not make these general policies, if you make a targeted policy, you're violating the principles of WTO. Okay. Now next concept within WTO, dispute settlement. Right? Next concept under WTO, dispute settlement. It is also there in the current affairs. Listen carefully. Whatever I'm discussing under WTO, all of them, one or the other way, are connected to current affairs. Listen and understand. Now, what is the meaning of a dispute? Dispute simply means there is a disagreement regarding policies of trade between member countries. Very simple. There is a disagreement between two countries regarding the trade policy. There is a disagreement. Between four countries regarding trade policy, there is a disagreement. Between or amongst 15 countries, there is a disagreement regarding a trade policy. So any disagreement is called as a dispute under WTO. How do we resolve the dispute? How do we address a dispute under WTO? Let's go point by point. I'll take a simple example. India and USA. And let me know, all of you okay if I take the example of USA having a disagreement over MEIS scheme of Government of India? All of you okay? I'm taking a literal current affairs example. This has happened. Okay. USA stated that India is a signatory to Subsidies and Countervailing Measures Agreement. But on the other side, India is continuously giving export-linked subsidies under MEIS. So we will not agree to this, right? There is a disagreement. So how this dispute will be resolved and how it has actually been resolved, let me tell you. USA will approach a dispute settlement body. DSP is nothing but dispute settlement body. And those who will ask me what is dispute settlement body, it is there already here. Please have a look at it. Dispute settlement body. So USA will approach a dispute settlement body and file a complaint against India. And the complaint basically says India, a member of SCM, is violating the provisions of SCM by implementing merchandise exports from India scheme. Now, what is the first step? Once the dispute is filed, once the application or the claim has been filed by USA, the dispute settlement body will ask India as well as USA to try to resolve it through mediation or consultation. Right? They will ask both of the member countries to talk to each other and try to see if this dispute can be resolved amongst themselves. Rather than the body resolving it, can you resolve amongst yourselves? Right? So that is the first step. Now consultations, mediations will be done. What if the dispute is not resolved? USA says, no, it is not resolved. Please take it up. Now, next step, dispute settlement body will form a panel. Panel is basically group of experts. So panel is formed and this panel will investigate. They will conduct investigations. Investigations in the sense they will study. Is India violating the agreement? What is MEIS scheme? Is it right going to give export linked subsidies through MEIS scheme? So they will investigate, they will create a report, submit a report to dispute settlement body. They'll submit the report to a dispute settlement body. Now let's say, and this happened, let's say the report says, yes, by implementing MEIS scheme, India is in fact violating agreement. It is not a fair trade policy, it is violating provision under the agreement. So what is the next step? What is the next step? India is not happy with the report. India will oppose the report. So what is the next step? India can appeal against the report. India can appeal against the report at one more authority within the dispute settlement body called as appellate body. India can appeal against this report finding in the appellate body. And in the appellate body, three members, whenever they want to take up a dispute, three judges in simple terms, right? These are members only. Three members will come together and they will hear India's argument. They will also look at the report. Now, the appellate body will simply say whether they agree with the report or they will disagree with the report. Appellate body, generally, it has been seen, they will agree with the report. Now, once the appellate body will issue an observation, where they will say either this is correct or not correct, they will side with the report or they will disagree with the report. Now, dispute settlement body will vote. Dispute settlement body will vote, and please remember this very carefully. By default, the dispute settlement body will accept the report. By default, there's an exception, I'll come to that. By default, the dispute settlement body will accept the report. Why? If the dispute settlement body wants to reject the report findings, if they want to reject the report, they need negative consensus. They need a negative consensus. And those who are wondering what do you mean by negative consensus, all the member countries who are members of DSB, all these members of DSB, they will vote against the report. Please do let me know any issue. Negative consensus means all the members of dispute settlement body will vote against the report. Now you think of it. You please think of it logically. Will you be able to get a negative consensus in a dispute settlement body? Is it possible? Please think of it. Is it possible to get a negative consensus in a dispute settlement body? That is, USA has filed a complaint against India and the report says India is wrong and USA will vote against the report. Will you be able to get that situation? Will you be able to arrive at that situation? No, you will not get it. That's the reason I said negative consensus, you cannot get it, because the party which has filed a complaint, at least they will agree with the report. At least they will say we are okay with the report. One of the two sides will agree with the report. If let's say a report says India is wrong, India will oppose the report, USA will accept the report. If report says India is correct, India will accept the report, USA will reject the report. So in these two, right, the parties, right, the disagreed parties, one party will accept, another party will reject. So as long as one party is accepting, you cannot get negative consensus. So that is the reason whenever it will go to the DSP, dispute settlement body, they generally accept the report, because negative consensus, you do not get it. And once the report observations are adopted by the DSP, it simply means India will have to start withdrawing the subsidies. Whatever policies which have been identified as unfair trade policies, I'll repeat the statement. whatever policies have been identified by the report as unfair trade policies, India or any member country, right, whose policies these are, they will have to start withdrawing the policies. Now, many of you will say, sir, what if India says we will not accept the report and India will also not withdraw the policies? What will happen? Very simple. If India does not withdraw these policies, which have been identified by the WTO now as not fair, unfair trade policies, then automatically USA can start taxing, USA can start imposing penalties on your products. Is the logic okay? USA will be allowed now. USA, right, for example, think of it. This bottle will go from India. China, let's say 20% tax. Okay, this bottle will go from India also, China also, etc. And USA will impose 20% tax. Why? MFN principle. Now, because you are not accepting the findings of the report and you're not withdrawing these subsidies, USA can target your bottle, impose higher taxes on your bottle, impose higher tariffs on your bottle. These are called as retaliatory measures. These are called as retaliatory measures. And even if USA will retaliate, you cannot go to WTO and say USA is violating MFN. Because in the first place, you are not implementing the report which was accepted by members of WTO. So they will say, first you withdraw your subsidies, withdraw your policies because these are unfair. Then we'll simply ask USA to stop such policies. All of you okay with this? Anybody has a problem? Now come to the current affairs. Come to the current affairs. On paper, this system looks very nice. And in fact, it was very efficient. Very efficient compared to earlier system under GATT. This was very, very efficient. In fact, remember this. The dispute settlement body was referred to as a crown jewel of WTO. Crown jewel. Very, very precious part of WTO. But today, even the dispute settlement body is not working. Even this has become, right, let's say, a useless measure now. Why? Come to this point, appellate body. Come to this particular point, appellate body. In appellate body, I said, 3 members have to take up any appeal. But what is the total strength of the appellate body? What is the strength of the appellate body? The strength of the appellate body is 7 members. Strength of the appellate body is 7 members. At any point of time, maximum 7 members are present in the appellate body. And out of these 3 members, if any appeal has to be heard, 3 members will hear the appeal. Now, please understand the next point. These 7 members will have a tenure of 4 years. These 7 members will have a tenure of 4 years. Once the tenure is over, through consensus, underline this term, once the tenure term is over, through consensus, a member is again appointed. Now, what has happened? USA consistently has not given consent. In the last couple of years, USA, whenever the appointment has to happen to the appellate body, USA said, I will not give my consent. I will veto. Veto means oppose. So now, no consensus has been arrived. USA has been consistently vetoing. As a result of this, can I say, number of members, instead of being 7, it will fall down to 5, fall down to 4, fall down to 3, 2, 1, and finally 0. Today, how many members are there in the appellate body? How many experts are there in the appellate body to hear the appeal? 0 members are there. Very simple. Because of withdrawal of consent from USA, because of the opposition of USA, we have not been able to get consensus. And because there is no consensus, we have not been able to appoint members into the appellate body. And if there are no members in the appellate body, right, because appointment is not happening, members are not there, 0 members are there today. Now, please tell me, if India will appeal against USA, understand this carefully now. India will appeal against this finding of the panel. Panel has found MEIS is wrong. A panel has been set up and panel says MEIS is wrong. India has to withdraw. Now, India will appeal against this at appellate body. Can the system go forward? Can the process go forward now? Don't you think process will get stopped here itself? So now think of it. Many of these countries, whenever panels are set up, panel will give the findings. They're simply taking the panel findings. They're going to appellate body. They're filing appeals in appellate body. And because there are no members in the appellate body, the whole system of dispute settlement will get stopped at this step itself. It will stop at this step itself. It will not go to the next step itself. And that is the reason the crown jewel of WTO, has become dysfunctional now. All of you okay with this? The crown jewel of WTO has become dysfunctional. It is not working now, right? It is getting stuck up at this step itself. It is not going to the last step where DSB will vote and approve the report. All of you okay with this? Can we go forward? All of you okay with this? Can we go forward? Anybody has a problem? What happens if DSP proved, it's a DSB by the way, DSB proved India is correct and proved innocence of India? How can you prove if the panel finding is opposite to you? USA will accept it, my dear. I don't know what is the difficulty in this. There are two parties. USA wants you to withdraw MAIS. India wants to continue MAIS. Panel says MAIS is wrong. In what world, according to you, in what world USA will accept, right, or USA will reject the panel finding? Let me know. According to you, why do you think USA, which is a complainant, will say panel is wrong, where panel is agreeing to USA? Right? So I don't know in what situation you are thinking of it. That will not happen. There are two parties. One will accept it, one will reject it. So as long as one party will accept it, you will never achieve negative consensus. Unless you achieve negative consensus, DSB will accept the report. Okay, done. So this is how, right? This is how basically the dispute settlement, right? Dispute settlement will work under the World Trade Organization. Can we go forward? If USA imposes a high tariff, then does it not violate MFN? You're not listening. Did I not say retaliatory measures will be allowed? USA will impose higher tariff. You cannot even complain because you are also violating WTO norms. You want to violate, you don't want any action. But USA violates, you want action. In what way it is fair? You tell me. In what way it is fair? You tell me. Right? So WTO says MAIS is wrong, withdraw it. You will say, no, I will not withdraw. But USA will impose higher tariff. You want USA to withdraw. How? How that will work out? Right? So I hope you understand. So next, WTO as well as subsidies. One is SCM. We have discussed this already. Another one is agriculture subsidy. Agriculture subsidy, that we will take it up tomorrow. Right? Tomorrow agriculture subsidy we will discuss. Now next concept, economic integration. Listen carefully now. Next concept, economic integration. Now what is the meaning of economic integration? It is a policy of discriminatory reduction or elimination of trade barriers for members in the group. Any number of countries who are there in the group, for example, ASEAN is a group. All of you heard of ASEAN? 10-member group. RCEP, it's a group, right? Mercosur, it is a group. So whichever countries are there in the group, 2 countries or more than 2 countries, for these countries, we will have a policy where we are going to reduce the tariffs or eliminate the tariffs. And why I'm calling this as a discriminatory policy? If India and Australia are there in the group, India will reduce tariffs and provide benefit only to Australia. It is a discriminatory policy. It is not going to provide benefit to USA because USA is not a member of the group. It is not going to provide benefit to China because China is not member of group. Whichever countries are there in the group, these countries will get the benefit of discriminatory policy. Okay, done. So that is called as economic integration. Now, what are the stages of economic integration? Right? What are the stages of economic integration? There are different stages. One is called as PTA, Preferential Trade Agreement. Second one is called as FTA, Free Trade Agreement. Third one is called as a Customs Union. Fourth one is Common Market. Fifth one is Economic Union. Let's go one by one. Let's go one by one. First one is PTA, Preferential Trade Agreement. Now, what is a Preferential Trade Agreement? Out of the total trade, that is happening between the countries, that is a trading partners, only a small part of the trade will be identified, and on this small part of the trade, tariffs will be reduced. Is it okay? I'll repeat the statement. Out of the total trade that is conducted between two countries, only a small part of the trade. So a small part of the trade will be identified, and on these small part of trade, that is import and export of goods, we will reduce the tariffs. So that is called as a preferential trade agreement. And please understand, there are no numbers here, right? Those will start asking how much percentage, etc. No numbers are given. But the fact is very simple. All the trade will not be covered. Only part of the trade, small part of the trade will be covered. And on this trade, we are going to reduce a tariff. That is called as a preferential trade agreement. Example, we have a PTA with between India and Chile. Only a small part of the trade is actually covered. Okay. Second, free trade agreement, FTA, free trade agreement. In case of free trade agreement, please understand, substantial trade is covered. Substantial trade between the trading partners is covered. We will either reduce the tariff or eliminate the tariff. Now, let me give you a very simple example just to make you understand. Imagine example one. Imagine example one. A and B are trading. Total trade is $100 billion. And let's say they will identify goods which are traded between both the countries, and they will reduce the tariff on these goods which are worth $20 billion. They will identify goods worth $20 billion out of total $100 billion, and they will reduce the tariff on this. So please do let me know. Can I say, right? This is a type of trade agreement where only a part of trade is covered. Anybody has a problem? It is a type of trade agreement where only a part of trade is covered, not a substantial trade, only a part of trade. Let me give you another example. Right? Take example of India, UAE. India, Australia. Our objective is to cover, right, more than 90% of the trade. India and UAE, India, Australia. What is the objective of this free trade agreement? We want to cover more than 90% of the trade that is conducted between these countries under the trade agreement. That is, let's say, same example I'll take. A will export and A will import from B. If the total value of the trade is $100 billion, and the agreement will cover, out of total $100 billion, the agreement will cover goods and services whose value is around $95 billion, around $98 billion, etc., etc. So can I simply say substantial part of the trade is covered? Is it okay? Substantial part of the trade is covered. So that's the basic idea. In PTA, only part of the trade is covered. In FTA, substantial trade is covered. Right? The scope of coverage under FTA will be very, very high. Right? So PTA, FTA. Any example of FTA? India, UAE, FTA. India, Australia, FTA. All these are free trade agreements that India has signed, and it is negotiating. With Britain, we are negotiating an FTA. With the USA, we are negotiating one more FTA. Right? So PTA and FTA. Now let me go to the next one. Customs Union. Time is not there. Okay, we'll stop the discussion here. Tomorrow we'll continue from here. Tomorrow we'll continue from the concept of Customs Union. Now before I wind up, I said India, Australia is an FTA. I said India, UAE is an FTA. But when you read the newspapers, rather than writing FTA, they will use a term, the comprehensive economic, they will use a term like this, comprehensive economic partnership agreement. Comprehensive economic partnership agreement. Right? One is a comprehensive economic partnership agreement. Right? Either they will use this term or else they will use one more term, comprehensive economic, right? SEPA and SECA, comprehensive economic cooperation agreement. Cooperation agreement. Okay. So either they will say SEPA, right? SEPA is CEPA or SECA, CECA, right? SEPA or SECA. What is the difference? Right? Is FTA different? SEPA and SECA are different. Please understand. SEPA and SECA both are FTAs. Both are FTAs only. But why do we call it as SEPA and SECA? Why not simply FTA? The reason is simple. Whenever you talk about comprehensive agreements, these are comprehensive agreements. The agreement will not just cover trade. Agreement will cover more than trade. Look at the term. Look at the term. Comprehensive. Comprehensive means coverage is more. We are not going to cover only trade. We are going to go beyond trade and cover many other parts of trade relation or other parts of relation. For example, in many of these trade agreements, many of these agreements that I have signed, for example, with UAE, with Australia, we are not just talking about trade. We are not just discussing and reducing or eliminating the tariffs. We are covering investments. We are covering intellectual property rights. So now is the logic okay? Why these are called as comprehensive agreements? Please do let me know why these are called as comprehensive agreements. All of you okay? Because the coverage is not limited to trade. It is going beyond the trade. We will cover investments, we'll cover intellectual property rights, etc., etc. That is the reason these are called as comprehensive agreements. Okay, so let me stop the discussion here. We'll continue the discussion tomorrow from this particular slide. That is basically the concept of customs union. Now, before I wind up the session, if there are any doubts, please do let me know. We'll resolve. Otherwise, we will wind up the session. Can you please show mode 4 slide? Arey Baba, PPT is there. Mode 4 simply means individuals. Listen, individual will cross the border and will remain as an individual, provide services. For example, please tell me, if you're an yoga instructor, can you go to America? Can you go to Australia, work as an individual yoga instructor? Possible or not? If you're a chef, can you relocate to Australia and still work as an individual freelancing chef? Of course, yes, it is allowed. But rather than this, it is also mode 4. Rather than this, if you join a company, Australian company in Australia, provide services. That is mode 4. Okay, mode 4, individuals. As an individual only you can provide, or you can join a company and start providing services. Except Pakistan, which are the countries in which we have not granted MFN? As far as I know, it is only Pakistan. Other trading partners, we have a MFN. I read newspaper but not understand everything in newspaper. My dear, it's because you do not read it on everyday basis. And do not imagine that if you read newspaper for 10 days, you will become expert in reading newspapers. Absolutely no. It will take time. It will take time. If you ask me, how do I read newspaper? I can only say, revise, understand the concepts, and keep on reading newspapers every day. Do not miss out. Read newspapers every day. Only then you will understand. Sir, if we can selectively withdraw MFN status from many countries, will it not become a trade barrier and violate WTO? We are not selectively reducing or withdrawing MFN to all the countries. There was a political reason, or let's say rather than political, there was a security reason why we have withdrawn MFN status to Pakistan. It's like saying Israel will withdraw MFN status to let's say another country. Can you say why is Israel withdrawing that MFN status? There are national security concerns. They'll say national security will override trade concern for me. Okay, any other question? Sir, is that why we are speaking of de-dollarization? Because of economic sanctions? Yes. Again, economic sanctions was one of the reason. There are multiple reasons. We are too much dependent on dollar. What is the concept of de-dollarization? Right? What is the concept of de-dollarization? Rather than using dollars for conducting transactions, we will use other currencies. For example, please tell me, is government of India promoting usage of rupees for conducting transactions now? Let me see how many of you are reading newspapers. Is government of India promoting usage of rupees for conducting transactions outside India? Not in India. Outside India. Answer is yes. Answer is yes. Government of India is promoting utilization of rupee now for many transactions. For example, when we purchased Russian oil, we said we want to settle by paying rupees. With UAE, we want to settle transactions with payment of rupees. Iran, earlier we settled payment of rupees only. So many of these countries, right, we are promoting utilization of rupee now. They're simply calling this as internationalization of rupee. Internationalization of rupee. Just like dollar is used in international transaction, we want rupee also to be used in international transaction. Okay. Then it is against WTO principle if I impose high tariff to Pakistan only. My dear, very, very bad. Why? You are not listening. If a country has a MFN, I cannot impose a different tariff. Does Pakistan have MFN status with India? Let me know. Does Pakistan have MFN status with India? No, Pakistan does not have MFN status. And now if I impose a higher tariff, what is the argument of Pakistan? What is the argument of Pakistan? Can they say they are treating us differently? Yes, they will treat you differently because you are not a MFN country for India. That is allowed. If you do not have MFN status, you can be targeted. That's the whole concept. Okay. Why rupee can't be used internationally? It's like saying why dollar cannot be used in India. My dear, currencies in the international market are used based on confidence. International market has a very high confidence on dollar. That is the reason most of the transactions are done in dollars. Confidence is very, very high on dollar in the international market. Okay. So economics is very, very difficult. If you do not revise, it's difficult. I'm only saying. And it's not that it's something new. I've told this in the first class only. You want subject to be very easy without reading. You want subject to be very easy without listening. You want subject to be very easy without revising. My dear, you're preparing for UPSC. It's not 10th class where you can simply by heart everything, write and come back. No, it's not like university also. Do not expect that in UPSC. Right? Economics is difficult because it is slightly technical, but if you are reading well, if you are revising well, it's not difficult. You don't want to do all of it, but then it becomes difficult. Of course, yes, it becomes difficult. Okay, it's like you want to ride bicycle, but you want to learn how to ride bicycle by reading a book. Tell me frankly, will that be possible? Tell me frankly. You want to learn how to ride a bicycle, but you will read it on the internet. Just by reading, will you learn how to ride bicycle? Of course no. Of course no. That is not how you learn how to ride a bicycle. You should sit on the bicycle. And I'm pretty sure all of you have experienced this in the childhood, including me, by the way. To learn how to ride a cycle, we had to fall down once or twice. We had to hit certain people, etc., etc. So it comes with practice. It comes with practice. You need practice. It's a very simple concept. It's unlike history, but it doesn't mean, again, do not twist my statement and say sir is denigrating history subject. Absolutely no. All I'm saying is certain subjects are easier to understand, certain subjects you need more efforts to understand. Right? So put in efforts, revise on day-to-day basis, read newspapers every day. After 2 months, 3 months, then you tell me reading newspaper is still difficult. Okay, so that's it from my side. Take care. See you tomorrow. See you tomorrow sharp at 6 a.m. Okay, and by the way, tomorrow is Friday. I hope you know what is a convention, what is a practice that we have started. Tomorrow is Friday. I'll give you certain articles from non-Hindu newspapers. Non-Hindu newspapers. And I have made a compilation yesterday. There are around 20 articles. I want to give you more articles tomorrow. So around 20 articles, download them, read them. Read them and then tell me, are these articles important from current affairs perspective for UPC exams? Okay, so take care. We'll stop the discussion today here. Tomorrow we'll continue with the integration. We'll finish the chapter, then we'll look at the questions, then we'll start the next chapter. Take care. Have a great day.